All right. You can see we're breaking the trend. Working out quite well. Basically, just gonna put this here. I just want to take a picture. Yesterday's movement down into today's, and exactly how that worked out. Trying to post this again. Not searching. I have it, but I'm just gonna go over this real quick so everybody knows. And just a refresher. So basically we've got the blue lines, which are the abstract lines. Basically they, not on this chart right now, but effectively they're lines that can obstruct us from getting to the targets, obstruct us from, basically being able to move somewhere. They're levels that sometimes we have to get back to. They can have abstract tendencies to them. They're typically barriers that prevent us from getting to places. Yellow lines are lines that break with impact, a typical trend change. We want it to break in the opposite direction of what it's pointing. They're your ordinary trend lines, the typical trend lines, not incredible impact, but the ones that have incredible impact, I like to highlight with red, yellow. They're lines that break in the opposite direction with greater force, and typically they go to the green dashed line. Um, Basically, I use them as target levels. Sometimes when you see them horizontally, they can be targets to horizontal levels, which basically give us an idea of where harmonic patterns are supposed to play out to. So I'll mark them, and basically they're price targets to patterns that can be on the chart. Sometimes when they're horizontal, they're two harmonic patterns. Sometimes when they're on an angle, they can be just related to a trend line. And the gold ones are basically important levels that I want to stand out. They can be 61s that I want to mark just for the sake of uh, highlighting them. And of course, you've got your red zones and green zones, and purple zones, which can be in the middle. Red zones, are the upper range, the high of the range. The green zones being the low of the range. The middle being a neutral purple or sometimes blue. So it's good just to understand that. And then There we go. At the view app now. There's a blue line that I do believe that we're going to try and get back to as well, which is right here. Of course, the every single green dash line and every single yellow line of the day has been broken in the direction it was supposed to break with great force. One thing that I can see about this is that it does have a range. Like, I am interested in checking out the ramifications of this range. So yeah, at the point that it gets to the 188 200, there's a good chance that we're going to have a relationship with the blue bar or blue line up there. I just put in that zone. And at no circumstances do I think that it's safe to drag stops above this yellow line. There's a good chance that we try to come back and test it. As a matter of fact, what this reminds me of is the hourly. Um, you know how we've come past these B points here? We've left them untested. And like if we take a look at the hourly, it's very similar in the case that we have two major B points at the same level. Same level, and they've never been tested, right? Then we go back to the 1 minute, and we can see we've got two B points roughly at the same level, never to have been tested. Interesting. Doesn't have to work out exactly the same way, but it certainly can be similar. As it is similar right now. And those are the similarities. So currently what we've basically done is left this consolidation, the area of the open, every single, B point that we've had at the open from this point right here, essentially to this point here, to this point here. We're all major reversals. This point here was the first one of the day. That one was the first move. Second, third, fourth. Basically, all of those moves are back to targets, and you can see the targets that it's presented are all roughly around them, this middle area. And on the other side of those targets, we have roughly the same kind of space on both sides, which I think is going to be pretty relevant in the future, contrary to popular belief. And of course, we can apply fibs to these levels. Most recently, we've done this pullback, which allows us to get a few fib levels up there, which is we're currently at the 188, or sorry, the 161. This one is a long-term 188, which I saw out of the corner of my eye, and that's why I said that. I was like, wow. So this one is basically a longer-term 188. What we're at right now is a short-term 161. Past the white line there, which is long-term 188, we have a short-term 188, which is, somewhat obstructing Oh, the ability to get to the blue line and the green bar. But the thing that's interesting about the blue line and the green bar is it's accepting of time to take it totally can take time to get there. That's fine. And at the end of the day, could this move be a 5 wave move? With this only having been the second wave, it's possible. Of course, we've just left the first consolidation of the day, and it's nothing like at an extreme. I'll tell you that right now. I find that any movements and any trades that have been taken within this range in the middle are at 80% chance of being overlapped. So that's the way we're going to treat that. And I'm like, whatever spike we do out of the top to try and get to this blue line, it is potentially possible to get it out of the bottom of the green zone. Because what I see here is a commitment to the range. It's really strange to me that the way that it's constructed is very similar to a phase A Wyckoff, like as if this was the preliminary support. And it came down for the selling climax. And then it had an automatic rally, and it did a secondary test. And then it came back up to this point right here. So let's just take a look at what that looks like just for a second in comparison to a regular Wyckoff. If we take a look at a normal Wyckoff here, basically we're just taking a look at phase A. We can see we're approaching the green bar and blue line like I mentioned. We're obviously going here in this phase A part. I just want to make this a little clear here so we're aware of what's going on. Is it not true that we started with this preliminary support, which I always like to circle because it's a little bit of a notch. That's what I like to look at it as. It's like the notch that starts the entire high of the range, and then it dumps out of it to give us this move down, and then it rallies up. Okay, and that dump is called the selling climax, the SC, and then it rallies up to the AR, the automatic rally, and that's so we've done this so far, right, to get to the AR, and then basically we come down to the secondary test and it's not all the way. Like it didn't make it all the way there. And I noticed that. It is the same thing. And then effectively, from that pullback that we made at that secondary test, it even does this movement here. And I'm like, well, we did totally do that. I'm like, you know, in here. Sorry. You know what I mean? So I'm like, all of those moves are there. And then we continued to do this. And it was like, wow, smashing up. And it did do that. And I'm like, well, I'll tell you one thing. Phase B can be bad. It can be brutal. It can be boring, and it can be a bust. Basically, like it doesn't have to work at all. And I mean, I'm not complaining because after all, look at the thing. Every single move that we do in Phase B gets smaller until it's over, and it's the biggest range, and it can be a triangle. That's terrible. They're all bad things. So and at any rate, I can't blame Phase A for ending the entire schematic. But Phase A is easy to remember because it's accurate. I mean, as strange and jumbled up as the movements of the morning seem, it did Phase A pretty accurately with all of the components being there. So I'm like, alright, cool, Phase A. The rest of it bites the dust yet again. you know, to assume that phase B is going to work is nearly insane. I would say it fails 75% of the time, which is a lot. I don't want to say you can count on it failing, but hey, there's that blue line just hit right there. So basically, that was the name of the game of this move right now was to get up to that blue line, test it, and respond to it. So we're looking pretty good. Morning. Okay. Okay. So we get this move again. Are you talking about the 1 minute? First of all? Okay. I should know by now. It's funny. Oh, oh, man. Okay, but it's interesting because you're interested in the blue lines usually, and that's what this move was a today blue line. That one on the 15 minute. I don't know if you see it on the 15 minute there. Okay. Okay. Yeah, that blue line right there with extreme accuracy it came to hit like that. It's kind of strange almost, right? I think I have the same one that you have on there, but maybe not. Take a look. Yeah, I think that's what I'm looking at right now. Is it? Okay. Oh, yeah, okay. The B point though? And it kind of stepped on it, or I think I'm doing what you're doing. You show me though. Let's see. Take a look. Oh yeah, it's different for sure. Oh, okay. So basically, yours is saying that this movement out of the top is absolute bullshit. That's what that says, which is fine. Which is fine. I mean, the one thing that's interesting about it is why did it care so much about that angle here? That's what's really weird about it to me. Like you can see that like that high, we both got it from the low. Like we both dragged this line. This line that the arrow's pointing to could be like it's like a medium line that really hasn't been used well, but I do think that it's pretty much the middle of this area. And what's weird is I think everything that we've done below it, we're going to get on top of it. Like it's gonna. Okay, yeah, yeah. Right. Mhm. Well, it seems like it on that chart. It doesn't on this chart though. It seems like it was like intentionally, grinding the crap out of that downtrend. Because this is a long-term chart. For it to use it 3 times and then dump off of it like that, and specifically come to the middle line, like, because the way that I had it on there was like this. Like we had fibs on there, and it took like a 300%. So I mean, like basically what that told us is that this bar went down three exact whole times. Like it literally like saved this little bit of a spike, which I'm like, okay, sure. We could see that spike on the other side of the range. I'm like, all of these, we could get this and this out of the other side. So it's like we came to this 300, and if I apply this to here, here, and here, basically, this level is incredibly attractive. Sure, my boxes aren't like incredibly accurate, but that is the accurate level. You know, perfect. No, 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 no. So what's interesting is it seems like that if it was to get there quickly, but it could get there by going sideways. Like it could basically spend so for all of the time that it does on top of this level, it is in the journey of getting to this point, and until we get to that point, things won't change. That's basically what it's trying to tell me. It's like well, this environment that we have down here, it's like it was on a journey to making sure that that was the extreme, and if we put that here, it could do it in multitude of different ways, but they're all acceptable. Yeah, yeah, yeah. Oh, definitely. Like if we talk about the possibility of it grinding, um, like think about where we are right now in this picture right here. Like on this picture, um, if we make a high, it is almost impossible for it not to be a triangle. Like right now we have a triangle right now, so this is the first thing that we're gonna have to deal with. But let's say we made, it even an even higher high here and came down. It's like how is that not still a triangle? You know what I mean? It's like and then it's like whatever low it makes, as long as it's not an extreme low, it's subject to reworking the bottom half of that triangle as well, and then potentially the top half of that triangle. It could spend a long time in this area. Like it is true. Like it is the middle, not only the middle of this range, but basically when we get a move where it starts out like this huge move up, and then we have a huge move down, and then we're inside the middle and we have this and then this, I'm like we're inside of not only this move but this move but this move and this move, and right now we're inside of this move and this move, like whatever the hell's going on over here, we're inside of a whole whack load of different moves and we're considered the middle of most of them. And I'm like that's the reality of it, and I'm like, well, I don't want to see it any other way, because if that's the reality, and if I'm convinced of from doing something else or positioning myself from this middle area, it's like, oh, rough for the long term. I'm like, it's telling us that if you commit to a trade from this middle point area, it's like you're saying that it has to leave this environment. And I'm just like, well, I'll tell you one thing. The moment that we break this line, it's better that it tries to come back to test it like this, but does it prevent it from coming back to test it again in the future? Like, let's say if we blew through it, is that not the entire exciting blast not subject to being able to come back in one giant S wave? Because if we do make this movement out of the other side of the range, who's to say that it doesn't see this place as the middle? Yeah, sure, you can be part of this move, but, having a hedge from that, is going to be really important. So it's really interesting to look at that way. But it is undeniably in an area that, if it was the 1 minute, we would have the patience to wait for it to leave this environment. So it's interesting. And if not, how not? I'm like, well, if you want to make a decision, I'm like, well, what is the reasoning behind it? So it's like it really does make me question that. I'm like, I'll find one. We'll find one, but at the end of the day, one thing I do know about this environment is we will leave here, like every other consolidation. So it's up to us whether or not we want to decide if it's good enough or not. So it's interesting. We don't know if it's going to leave right now, if it's going to leave, you know, another day from now, but it is definitely the case that we are in the middle and it could take some time to leave it, unfortunately. Hmm. On the 1 minute, we've got little B points in there, of course. So I see that. Okay. Interesting. See, that's interesting you mentioned that, because this is what I saw when I looked at the daily. Um, or not the daily. Was it the daily? It was the hourly actually. Yeah, when I see the hourly, like let's take a picture of this real quick. Like, tell me that doesn't look like that. Like that, yeah, it is that. I'm like, well, what? That's that. Yeah, very similar. The components are all there, and I'm like, you want to know what's crazy about this? Is it missed the B points, and it's doing the same kind of stuff here. And I'm like, what is it because of everyone's unanimous decision and awareness of the long-term pattern that it makes this move on the short term as well? Or is it the entity that has control in the long term displaying their control in the short term as well? I'm like, it's probably more likely that. I think that there's like it's funny, Composite Man would, or not the Composite Man, Wyckoff would talk about um, you know, the Composite Man as if they were like a general, and like I see these things as like show of forces. Like we have control and we know it. You don't like most people don't see the patterns and they don't understand these patterns. But when they make them on different time frames at different levels and they're all fitting the exact same parameters, it's unbelievable to me to say that that's the unintentional work of the masses, but the intentional work of those with all the profit. Another thing that I find that's really interesting about this range is as messy as it does look, the red zone and green zone did used to be a range, and it was kind of hard for me to determine, whether or not there was a neutral zone in the middle. It did not have a neutral zone in the middle, and you can kind of see it has that now. Like it was very erratic inside of this area where it didn't really pause much in the middle at all. Like it didn't acknowledge that middle area as being somewhere that slowed it down very much. I noticed that the bottom had a lot of slowdown, and now we step on top of the red zone like it is something. And it's like when the market responds to something like it has run into something, you know, and there is something there. I mean, well, that's another point to that thing actually being something valuable to respond to. Doesn't mean that it will always in the future get responses, but it is currently in the current environment valuable enough to get a response. And I'm like, well, what is a response? If we don't spend any time at it or we don't reverse at it, it's not much of a level that we've responded to. So that's the way I look at that. Very clear. All of these targets have been hit. Short-term levels have been, sorry, hit as well. And I do think that we've got a little bit of a B point left up top that's kind of negligent. You know, been it's been forgotten. And one thing that we can see here is that it's a fact that we didn't just do this move. We've done this one. And it's very similar to an S wave that we've created an equilibrium out of this point, a spot where it once was resistance and now support. Having broken every single trend in the direction that it's supposed to break, here we are with another one. Getting a response close to the VWAP. Honestly, the VWAP is the worst place to ever break a trend from, but they do break from there. Yep, it did. D points taken off, and I wanted to say the triangulation continues, but it has yet to really make an effort at triangulating. This was the last triangle that we made, and it was very much a particular one. We could be using the confines of that triangle yet again. One thing that I can't help but notice is that the triangle that we do have right now, it did double. And we saw that yesterday. And I mean, like yesterday we saw it not only double but triple. And when it was done tripling, then it made a little bit of a pullback the entire day. It literally worked out. You want to know how it worked out? It worked out like this. It not only doubled but tripled, and then it made a consolidation and did this again. That's what it did yesterday. Oh yeah, and when it was finished doing that, it grinded the high for what seemed like an eternity just to come back down. It was almost like, you want to know one of those green dash lines that I had before? It's like, if it doesn't break out through it, it's going to break out to it. At the end of the day, we didn't break down to that green dash, or sorry, to that blue bar. We broke down through it, but we knew that the exposure to that bar was a thing that was very important, and effectively every single bit of movement that we did since the moment that that blue bar existed was taken back. And that was the name of the game, of course. I've since removed the text to avoid clutter. But the text, of course, said this: everything beyond the blue bar will be taken back to it. Of course, every single green dash line that there was along the way was taken off. And not to say that it was easy. I didn't say that it would be easy, but it was the way, and it was the right way to be for that time. There's no better way to have looked at it. It was essentially, but it took a lot of time. It wasted a lot of time up at the high before coming down. Very similar to an 11 low zone, but an 11 high zone of absolute slow terror, because that was just absolutely slow. After hours, really, really dead environment, for hours. Of course, we've just hit a B point up here. We've got a little one down here now. That's another one, just basically not a huge. An M into a W does exist as we currently have it. Something very common. Now, of course, these previous lines, they start to become of less value to me. And these ones, their current trends, they become a bit more valuable. This is the current trend, and until we break it, we are going up, and that's a fact. And the thing is in order to break it, we have to get to it. And, that could have something to do with this B point right here as well. Of course, that B point is a spot where, if you drag your stop above it, you're subject to losing your position. I find it's very likely that you lose your position if you drag your stop above this red zone. The red zone is somewhere that can be tested and stood on. Of course, we do have an untested B point, or two untested B points, should I say, down here. That was the level that we could, quote unquote, step on top of as well. And I say no stops are safe above this level as well. So, that's a long term picture. Of course, for the people of today that are positioned from today, obviously you're not going to put your stop below that level. But, if you're in from yesterday, that still flies. If you're in from any time before that B point. the green bar and the blue area, when they both intersect, ironically, this is a level that we were looking at before the break of this line. Of course, this blue line does come from today, and it is a line that we expected it to get back to. And there is a yellow line that comes from the high as well. This is a line that I do think that we will break ultimately as well. A line that I think that should be given a little bit more importance. Now, I do believe that this one will break first, so we want to be careful about that. Because of the fact that it needs a readjustment. And if it's like, okay, the reason why it's not as safe to break a trend when we're moving so steeply is because whenever we break a trend and we have a steep, like let's say for instance, if we're trying to break a downtrend and we're running up on a really steep trend, whatever we do break that trend with is subject to coming back whenever we break that uptrend. Like whenever we break this really big steep trend, it's likely to try and come back for a retest, and that will readjust the trend, giving it more space when it does project itself off than it had last time. So it really can advance and then have more space than what it had originally with the trend. Because if the trend was really tight, and it only had this much space, it can't effectively respond to a level and show us that it respects a level if it doesn't have any space to do it. And if it's basically teetering on the fact that it's going to break the entire trend that brought it there off of just a simple response, it's not as good. So you can see, like in this case, we've basically broken the short term trend from a 76-degree angle and literally taken it down to a 42. So like look at the distance that it had while it was above this level. How much space does it really have to trade to show us that it likes the blue line? Not very much at all. But now that it's pulled back, look at how much space that we can actually spend acknowledging these levels. Now that we don't have, a really short-term steep trend in the way. And it's a fact that yeah, we do have other trends like this one here and it could be breaking now, sure. But at the end of the day, could you say that we're not in an uptrend if that short term trend breaks? Well, not really, because this trend still exists. You know, if this one here sorry, breaks, it doesn't mean that we don't still have an uptrend. We still have this bottom yellow one. And I mean, this one can break 4 or 5 more times, just like this one did here, before we even get close to that other one. But until we break that other one, it is considered in an uptrend. And what's funny is, you can have that situation with the highs be the same case where until we break that red yellow line, we are literally converging between the two lines. It is a triangle effectively, but not one that we would typically draw in. It is triangulating between those two lines, and until one of them breaks, we are confined between both of them. And that's a fact, right? So we know that things can be a certain way until one of those lines break, but we know as a matter of fact that when we get to this time, we will have to get through one of them. And that's the beauty of it. So we know that by that time, things can be ready for a drastic change. So basically, what I'm thinking is, you know, let's say for instance, this trend might have been too steep, but this one's acceptable. Now, we couldn't break this blue line on that steep of a trend, but this one we were able to because we had the time to acknowledge it, use it as resistance, come back, step on top of it, and all of those All of those things as of now are completed. And it doesn't mean that we're not on a time limit with that yellow line. Like, let's say, for instance, it still is a significant barrier and it takes just as long to respond to it as it did before. We would run out of nearly all the time that we have to be in this trend. And it would become even more riskier to assume that it's going to have to hold. Now, as of right now, we still have a decent amount of time with it. We have enough time to make the other consolidation. But because we've consolidated here, it's a lot easier for us to actually make it through. As you can see, we did make it through it and we did actually advance farther than we did the original time. So that tells us right then and there that, progress has been made because of what we've done. And effectively we can see the barrier that was otherwise holding us back has been hit again. We've acknowledged it by coming down and we ran at it again, and now we're stepping on top of it in a strange way. But of course, the movement is very insignificant. Just all of the things that we can see are happening are good to acknowledge. You know, Another thing as well is I'm like, how many M's and W's have we seen today? Is there a chance that on the break of the yellow line, there is a risk of this being an M that matches this W? And it's like, okay, of course it's a risk, but at the end of the day, um, the final line that matters the most, I think, is going to be the red yellow line. Negative responses that can break the steepness of this trend first would be acceptable before making our journey over to that level. So I'm like, the yellow line, it reminds me of one of these levels. It's a little too steep to break the major barrier. In the event that we do need to break it first, I don't think it's going to be incredibly significant, but at the end of the day, what it will do in the event that we break that support line is it will make it insignificant in comparison to whatever new low we make, and that will shift this point along. Sorry, this point along, which is a fact. And I'm like, why it would want to do that? Seems like a big waste of time, but it is a triangulation method. And I mean, with it being in the middle of so many different moves, I'm not surprised that it chooses to act like that. So, if you take all the components of the situation and you understand, exactly what the facts are, it gives you an idea of, whether or not it's capable of producing volatility that meets your standards and whether or not it's going to produce patterns of, you know, good enough size and clarity to be able to take part of. Like in this case, we can see that it is absolutely reluctant at making its way to the B point for whatever reason. You have to see that the people of this area that are close to this VWAP are actually struggling to get that B point hit, which is interesting to me because you think about it. Let's put some fibs on there. It just hit the 188 200. Anybody that tried to get it off the 161s had a little bit of trouble, but 188 so far has had its first test and it's managed to come to the low of the node. So many people on the short term will be looking at it as a head and shoulders, curious to see what they do with them. Um, it is true that the entire range that we had at the bottom managed to double to this point in order to fulfill these expectations. And in doing so, we've created this node. And you could say that since we've been at this level, there has been no level that it finds more comfortable to trade at than this particular node, this level right here. And I mean, I tell you one thing, we're closer to the end of this range than the beginning. Because I can tell you that right now, although I did mark this point as a very significant one, is it not true that it has made this level into a very strong resistance level? And if you look at that as a confinement area, like a level that we're basically using as resistance, and then you can see that this level, we're using it as support right now, they come to an end here. So could we expect there to be some sort of short-term change there? Well, I'll tell you one thing. When we did leave this environment before, We left it with a spike, and that means we do have one spike on one side of this consolidation. If we made one on the other, it would suspiciously get us to the or sorry, to the red yellow line. And in the event that it was hard, it could make an effort at making sure that it came back to this level after having hit that high. So we have to watch out for something like that. After all, typically when we see consolidations that are really centralized in a middle area, it's a lot easier for them to be even. And basically, right now, all of the people that have essentially been trading since 1015 to 1050, there has been one portion of time here that it was outside of this area. And I can't help but notice that that's how much time that it's spent in these areas too. And I mean, like, well, if this is the time that insinuates it should change, could we expect change now? I mean, like, well, let's see. It might be a significant time. And I'm like, well, how significant? Was it a significant time in the past? Well, other things took that amount of time. Suspiciously particular, you know, the work of the public, I find it incredibly unlikely. But more like a systematic approach. Um, this line here, but in this environment, sometimes we can find that there's equality on both sides. I don't think it's very equal on these sides right here. Like I think that it's very much like this, and without it being equal, this is different, you know, than this. When we get one of those highs coming down and it's not parallel, debatably has that rising wedge aspect to it, which can be great in the event that we break the high because we know that there is a very strong likelihood that we will return back to that rising wedges high. Basically, this is also the second test of the 188. You could say that, like yesterday, the people of the 188 200 have been, they've been dished out some pretty. It's been pretty crappy for them, and I'm quite interested in when that will change because it's not like it's not going to work again. But why put everybody through this much to get exposure to such a small pattern? First of all, like ATRs, it's 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 coming off, but it's still reasonable. It's good, but the movements are a little bit like a barcode. Now, of course, we are running into the support line where it is true that in this environment, it cannot continue doing what it's doing and maintain above this line. It's going to have to pick one or the other. If it wants to stay at this level and continue growing this node, well, it's going to have to do it on the other side of that yellow line. And if not, how not? Well, if it doesn't want to get beneath that yellow line, well, it will be forced to exert energy to maintain with it then. And that's a lot to demand sometimes. Not impossible, of course. We make trends and hold them all the time. Of course, the more we consolidate, the more likely we have energy to continue with the trend. However, we have two highs right here. Looking at momentum, it's kind of crap the bed. We can see there's clearly a bearish divergence. The B point eventually finally got hit for the people of the 188 after 3 consecutive highs as well. Now, we did make a new B point, and it is not safe to drag your stop above this level. In fact, it's not safe to drag your stop like into this node or anywhere near that POC, there's a good chance they try to get more volume at that POC at some point. But effectively, it reminds me a lot of what happened down here. When I can see that just like the bottom, we had one component here and it was at an extreme, and then another component of equal size here, separated by something that is exactly inverted the other two. So if I do this, so we've got one portion that's inverted in the middle, right? And then two pretty much equal sized portions on either side. And I mean, in this environment, we have two portions with an inverted center. So as I mentioned, this yellow line could break first, but it's not going to be the most impactful one. The red-yellow one will be. And whether or not this has been enough of a pullback, I don't think so actually. I think that they're absolutely insane for making this the readjustment. I'm like, how much time do you think it's bought it? Not enough. Like we've taken it from a 45-degree angle down to a 42-degree angle, and I'm like, I hardly even want to readjust that line. See? So we may be in for another break of it. I find it very hard to believe that whatever gains we do get on top of this level are going to hold for long if it does keep this trend. This kind of movement, what has it likely done? Well, many people will have likely chased it, and anybody that tried to chase it would have likely have been chasing it from this point down, and it came back for them. Curious to see if these are the finishing moves of the consolidation. After all, it is now the longest consolidation of the day since the open. There's been no level that is tight, stayed tight at one level for as long as we have here now. You know, like it's all ended at this much time or this much time, right? It's all like that much time. I'm like, literally, we take that much time when we do things today, and I mean, this is more than that much time. So I observe that. I'm saying, well, there could be something different around the corner if we're interested in making such a great change to our consolidations. Now, of course, it is around that time where we are about to change the hour as well, so we can take a look at that being an important factor that could increase volatility. Of course, volume gap. Let's take a look. This one here when it pops in. Definitely see that there. Interesting. Zooming out, I can't help but notice that we did spend some time here overnight. And like, could we be... So this line did break again, as it should have. And I'm like, how much time do we spend at the re? That could be the low of this gap. Where, if you really think about this move here, it could have been a B point to a W, or sorry, to an M. And when it did jab down, it didn't even make it to the other side of the gap. And yeah, sure, it grazed the wicks and spikes that are up here. But I mean, like, the B point usually is on the other side of the gap, and it just seems half-assed. Seems like there wasn't a lot of liquidity down there at the B points whatsoever. Doesn't seem like big players were really taking profit at that B point. There wasn't any liquidity there, so So what that makes me think is it's another kind of trap for the Bears, to be honest. That's why I think lines like this will have more importance. Sure. Initially, they can struggle to break, but they pose an interesting relationship with the red yellow line because it is true that we won't be able to get to the red yellow line if that line does not break. Now, this one, as much as I want to turn it down now, I will readjust it on the moment that we break that support line. Like, I'd like to see us be able to do what we've done under the blue line above the blue. I'd like to see us be able to make red zone, green zone out of that. So yeah, we've broken the downtrend there. I'm gonna do what I said I would do and readjust that support line just like that. Now I don't care about this line anymore. It's done to me. It's all about the support line now and how much time it's bought it with it. And I'm like, yeah, whatever time it's bought it, but use it wisely because it doesn't have much. And I'm like, is all of this how we make it through green zones? And I mean, like, well, if this is how we do green zones usually and it's treating it just like usual, is it going to make it into a green zone and actually use the red zone as a way to make it go back and forth between the two lines like that? You know, because it's designed to make this much movement, right? Don't you find it suspiciously particular that it's already made the move that would seemingly fit between those two levels? And it's like it's already made that an appropriate amount of movement that it can pull back when it pulls back. Suspiciously particular. So does it want to make it into an S wave? Because you want to know what's funny about that? Is this exact S wave be exactly appropriate? You know, coming from exactly that high? Very strange to me how particular that is. So here we are on top of the green, as though it's listening. Now, it doesn't have to make it easy. I wouldn't make it easy. Testing the green zone is going to be part of this. So allowing for the test of the green zone is really important. And I mean, like, if you were thinking of dragging your stop that close, then why? As well, I would want to know because it's not enough room. It's like unless you want to sell way before the red zone, way before the B point, it's like then you drag your stop up. But that's the effect of having done that is to lose the position. And this is a neutral area that, for whatever reason, is capable of being a barrier. And it's not much of one, but think about how much time it's taken to get through it every time we have gotten to it. And can it take that much time again? I mean, like, if not, why not? It's not much time. But if it doesn't take that much time, then it'll pay the price in the future. And it'll come back to this point as swiftly as it left it. That's very likely to happen. Of course, if it does make an S wave, all of what we see up here is subject to coming back to the point that it broke out. Ooh, and if we could get on top of this line, that would offer an interesting trade too. That's a blue line if we get on top of it. Yeah, because I suppose I can make it a blue line. Keep it a blue line. It's subject to being a blue line, so we'll do gray that out right now. Because it's not really useful unless we get to it. I'll tell you that right now. And what that kind of reminds me of is what we saw in the Dow Jones yesterday, where it was doing this. I'm like, what if we do that? Like, do you see what we did with this You can tell it wasn't the Dow that called the shots on that move. It was totally the Nasdaq. Because it was the moment that it ended that blue bar that it started the dump, or was it not? So it was in association with that blue bar that made everything that was above that blue bar come back to where it began, and more, right? It was one of those, if it doesn't break out to it, it's going to break out through it kind of thing. After all, it did come back to test the green zone. I said if you drag your stop above that, that will be the effect of losing position, and that's exactly what the effect was for anybody that did that. So, I mean, as strange as it is, well, also we had little B points play out, sure, and I'm like, well, I don't need to really know all of the reversal fibs and everything that happened in that environment because I'm like, I knew it was going to come back to that level anyways. It's like unless you wanted to trade it, scalp it, sure, but I mean, it's not like it's an incredibly small move. It's totally doable, but you want to make sure that you're safe, and that's a quick move for many. Not to say it's not a capable trade, but you can see how swiftly it was overlapped yet again. It's like unless you had absolute intentions for it to merely just test that level and make that into the equilibrium, unless it was the B points that you were targeting, the markets come back to slap everyone on the wrist that expected more out of it. Common, I suppose you could say, but look at how quickly the W was formed, and how quickly could we make an M if we were to decide that this line should break? Is it not true that every single time a W does go into an M, there is a line that's created from here to here, and in order to make the M, it has to break that line in order to play out? Is that a fact? Like I see it as an absolute mathematical fact. Like that line becomes incredibly important. It's like, and I'm like, all right, with the few moments that we have with that line, let's see what it chooses to do with them. I find that incredibly important information, seeing as the fact that we've managed to go in this entire consolidation from M into W, and then I'm like, okay, strange things happened in here, but it tried to make an M and it sucked. Then it made a W after, and it didn't. Ironically, yesterday it was good at making M's and W's. You can see that I was pretty forgiving with this one, but it actually is an M into a W. Ironically, it's true that they all are harmonic patterns. This one, this one being the bullish ones. Anyways, so we like to make sure that we're aware of that. This is one trend that I find very steep. Every other time we've ever had this trend today, did you know that it could be subconsciously programming people to understand that this trend's supposed to give them a certain result? I find conditioning is actually part of a lot of consolidations. Because people always like to look back in retrospect to see what's happened so that they can make it happen to them. And I don't do that, but I find a lot of people do that though. I mean, this is a time and a place for doing that, now that I think about it. It's not like I haven't done that before, but I find that 2024 and 2023, you gotta be really careful doing that because it's worked really well in previous years, and these years are different. Something else works well in these years, and it changes very, very regularly. And it's a matter of staying on top of the moves that matter on a regular basis, and the analysis that's required to understand those moves that matter does change on a daily basis. So it's kind of intriguing to me. Not something that you can like write down. It's something that you have to understand. It's like when you're in a conversation, you can't anticipate what the other person is going to say. You have to wait for them to say it so that you can then read what they want you to comprehend. Just like the market has to bring me moves so that I can read them and comprehend them. It's Very intriguing. If it gives out crappy moves for a prolonged period of time, then for a prolonged period of time, I am waiting until I find something accurate, until I find something that's attractive. And not always does it have to be a matter of taking it, but understanding it is incredibly important. And only if you understand it so well will you take action on it. However long that takes, however long the market decides to make to make it take before we can begin the heavy volatility. Now, of course, we are on top of this green line and we are about to hit the red yellow. And we can find that this is another controversial time that could change things. Basically, we were looking at this before like it could have been a rising wedge. Let's talk about the results of what that's offered the part that have been part of it. It's come down a little bit and been so aggressively against that movement that it took everything that it did down and doubled it up and effectively made it into the pattern that we've seen it do before, where it made an S wave. And that S wave met the equilibrium very successfully and completed this pattern before getting to where we are now. It's true that the consolidation that we had before starting the S wave is possible to form after. What we are left with is ironically something that looks just like this. And we have it below the consolidation and on top of the, sorry, below the green line and on top of the green line. Suspiciously particular way to acknowledge a range, first as resistance and then as support. And I mean, like, is it not true that that's how we got through the red zone? The red zone being an initial barrier that was capable of sending us down. And then, lunging at it and lunging at it, finally breaking on top of it and stepping on top of it and conquering it to the point that we're at now. That's what we did. Well, I mean, that's been the approach to advancing the market today. I mean, in retrospect, we can see that the average consolidation size is much like the consolidation that we have now. We've done this before, suspiciously particular to many of the other times that we have went into this sort of confinement area. It takes roughly this amount of space and time to complete this confinement area. Oh shoot, this is interesting. What we did right there reminds me a lot of what we did here. It's almost like the relationship between these two consolidations were the same. It's a stretch, sure, but and then I'm like, well, hold on. Was it like it tried? No. All right. Interesting though. Sometimes you can find that, like when we're in an M and a W, it's got two highs and two lows. Um, when we do this, it does have five waves in the middle, right, and everything, but these highs, can be remarkably similar to those lows. Can be. Not always, but they can be. And if they are, I mean, I'll be damned if I don't notice. So that's the at least we have to look, right? And a lot of the times, you might find me overlapping sketches. Well, I have to look myself, right? Like I don't just know off the top. Like I'm digging. I find facts all day long. I don't stop. Literally don't stop. You know, I just keep compiling the facts until I have a great understanding of the situation. Basically that is the way to go about it. And it is true that we have finally ended this consolidation roughly around the same amount of time that we ended the others. And could we produce the same results? Well, I'll tell you one thing. It's true that when we end consolidations, we make roughly this amount of movement, 25 points. Like 20 to 25 points, I'd say. 23 points in that case. We ended this one down here. 30. Ended this one here. 30. This one here. Like I mentioned, the yellow lines on the bottom were to break first, and they did. Now we approach the red yellow line. Now, of course, this one can be readjusted as we readjusted the other one. And in a lot of ways, what we had here was much like a high that came down with another high that came down, and it rallied, right? What we had here was a high that came down, another high that came down, and then it rallied, right? And then it level. What is the difference between what we've done there and what we've done here? Well, sure, the secondary low is a little bit lower, but until it was finished doing this process, is it not true that it didn't do anything but this process? And when it was done that process, then we could move on. But while it was doing that, I mean, God forbid we obstructed it from being able to finish because it loves doing it. Well, while it's in this trend, we could assume that that is the best way to advance it. And if we see something wrong with its ability to do this almighty pattern while we're in this trend, well, let's really be careful about that. And I mean, when we see a W, the B point can be grazed very, very swiftly. And both of them share that. Like, do you see how this B point in the, I'm not sure if you see the W I'm talking about, but this W right here, it sniped the B point so quickly that it made the 1 minute candle into a wick. So I'm like, okay, interesting. We've broken the red yellow line and now we've tested the red zone. Of course, this is a zone that could provide a move back to the green zone. Not necessarily something that you want to trade, but something that you want to allow to happen. Now, of course, just like you want to allow that to happen, you want to allow a test of this red-yellow line. It is incredibly likely that we end up testing it, and any stops above it are subject to getting stopped out. And that's really, really key. We could actually break back beneath that line, so we have to be really careful about it. So I just added in the supporting red-yellow line. This one I will take, like, I'm not going to take it off, but I'm going to reduce the importance of it because it undeniably is broken and we can never take that back. Did you know that that line right there, it has broken it and we can never take that back? There's nothing that we can do about that. Yeah, we can get back beneath it, but it will always have this break above it and it will always show as a stain on its reputation of its inability to break properly. Now watch it come back to test that level as it should. And I think that what we're in for, that's actually more important, is this crappy little uptrend. It provides an incredible danger to a line that has been incredibly like this has been the most important line of the day. Debatably, everything that we've done has led to this line breaking, and it's been a matter of knocking out barriers that would otherwise be capable of holding in most environments. To be honest. It's I look at this as like it's a squeeze, to be honest. I think that somebody's forcing this out. Is it true that we've doubled the triangle? The time, perhaps. A triangle that we've used in the past? One thing that I find interesting about this blue bar is that we've actually strayed beneath it far more than we were above it. And it is not the middle whatsoever. No, even if I was to look at that line, it's not the middle. Like it's just done whichever which way you want to look. It is interesting that yet again it is the case that those that were exposed from the beginning of the day, exposed to the targets of the day, to the yellow lines that I presented at the highs, like that one, they're exposed to the most amount of points the market had to offer today. Change that. But essentially, so now it is the case that we understand that this line at the support right here, uh, it essentially has to break before getting back to this one. This is a line that It's a very large long term trend, and it doesn't have to have the same kind of retest as a short term trend. It can have a longer, more drawn out retest that takes back all of the movement beyond that break. So we're subject to seeing that be the case here in a moment. Take a look. Yeah. Well, it's supportive of its ability to continue through this movement. Yeah. So one thing that we can see as well is that that downtrend, it did break on the short term there as well, and like we are above it. So coming back to test that could be on the table as well. And it also reminds me of the fact that I believe that the short term uptrend will break and readjust before we even get going. Channels? Yeah, they're easily applied. Well, that was on the hourly. Yeah, that's the yeah, like originally 300 being here, and then these ones. Basically the 300 on both sides. Yeah. Basically what that shows is that on one side we have that 300, And on the other side, we have that same 300. Give or take that little bit of a spike to try and get to the 341. Um, I do think that this is like a five-wave move. It reminds me of an ending diagonal. Like I can show you the same kind of move. These kind of consolidations are ATR killers. The average size of the candlestick just gets absolutely destroyed. I do believe that we're closer to the end of this consolidation than. It's strange to see the appropriate amount of pullback that would be necessary to get to the retest is so far just the average amount of pullback required when we're just doing a counter trend pullback. Not really doing much more than counter trend pullback if we do get to the test level. Must be allowed. Doesn't necessarily, like I said, have to be something that you go for, but something that you allow in the event that you're exposed to the trends breaking, uh, like they have in sequence. That's why earlier, when I pulled up the legend, it was to show the value of the break of the yellow lines that I had on there. There's two at the time. One going down and the other one, insinuating that we need to get up to the green zone. Now we've gotten up from the green zone, and like I said before, we could be interested in using the green zone and the red zone. Now we went through the red zone as much as we did last go through the green zone. It's like, okay, that's what we have done. And it's taken nearly the same amount of time that it acknowledged the green zone with to do the red zone now. So is that acceptable? Of course it is. This is what the market demands that we, understand. And a lot of people will just assume that it's, in a range or something like that, going sideways. But I see it with great purpose. Something that's supposed to show us the equality of this environment, and it's done a great job at using the barriers and making everything symmetrical outside of them. Thing that I love about it is that this barrier has never touched the price. It's never been something that's ever touched the price. It's something that we anticipated would be used as a barrier, something that we said, it has a relationship with the green zone. And it shows us that that relationship is the same by spending the exact same amount of time on the red zone and the exact same amount of distance having responded to both levels. The work of the public, highly unlikely, like I say. The work of those that have intentions. Consistency is intentional. Not for 2 seconds do I think it's not. And any consistency that's developed or based on luck will soon be taken back by those that have intent. That's the belief that I have. So it's like, the people that work for consistency have it because they intended for it, because they work for it, because they wanted it, and because they understood it, not because they lucked out. That's the key. One of them. So what we have done here is, as a matter of fact, that we've managed to come all the way down to the bottom of the node. And we basically ranged the node as we would, in one of our previous consolidations. And, you can even see that the confinement area that it chose to make inside of this environment here can be matched to the one that we made most recent, this other environment. See the appropriate amount of consolidation has been completed. And out of this, could we see that it did go sideways, it did go down, and it did go up just to come back to the middle? That's what it chose to do there. Could it do something similar? And I mean, like, when we do this twice in a trend, how is it not like a five-wave move? We've got two pullbacks. It's just you've identified exactly how it's pulled back each time. What's the, like, it's a fact that it does have two pullbacks and three advancements in the same direction. And when it pulls back, it may not be the same size, but it's doing the same thing. And it uses the same method to pull back, and we can, accept it or neglect it, kind of thing. And I like that. Yep, probably looking at down here. Yeah, that's a really good one. But I do notice about this one as well is it did come back from the 161 down to the 100. So there is a chance that Yeah, no, that's interesting. We may be interested in just getting to that high. It does have a pretty big node there too. So I'm like, all right, well, getting to that 261 does present a risk that we may be interested in getting to the original B point, sure, but it is already tested. This one actually isn't though, and I'm like, I could already see just by dragging this one up to this point, it is where we currently are. We'll be just past the 200 of this short-term move. I'm like, oh wow, hold on. So that 261 is also right there too. So if we take a fib from this point, a fib from this point, we have two 261s lining up at the same level. And that's intriguing. Now, what's crazy about it is it doesn't even matter what it does beyond this point. Everything ends up coming back to test this level in the future. So I'm like, that's very clear to me. I want to see, in order to reduce the clutter for everyone else, it's very easy. All I got to do is just mark in this little level right there, turn it up. That's a gold zone. We know that between that that area, we've got two 261s. One of them's on the bottom of the gold zone, one of them's on the top of the gold. That's a really Oh yeah, so like we double that and we're up there at the 188 200. Got three things. Yeah, that's it. Yeah, it's not bad. Okay. This consolidation is coming to an end. Of course, we do have like very limited space between now and the red yellow line. And whatever space that it does try and buy itself, it is subject to being taken back when we do try to do the test of the last most recently broken trend. Now, of course, this first short-term trend has been broken, and it has been reduced into something that's not incredibly significant, but it is the new short-term trend. And until it breaks, the red-yellow one will not have an opportunity. But when it breaks, it could be on its way to breaking the red-yellow one. And basically just confines the amount of space that it has to respond to a level, because it only has moments before breaking yellow one. Anything that it does from here on out could be a lunge, like a spike, to try and get to that 261, but longevity does present an issue. So we're about to hit it. The 261. Volume increasing pretty drastically as we do approach it, which is intriguing, having not actually hit the level yet. Keeping in mind that this level not only is a 261, but it's also a 227 in the bigger picture, like close to it. 227 that we responded to overnight, that is. Like a secondary test almost. The way that it's approaching it suggests that we will get some wicks and spikes on the other side of it. So keep that in mind. But of course, this is the 261. The extreme of the VWAP band as well. We can see the VWAP that crosses through the middle has two bands, one at the high, one at the low, both purple. We can see that we're approaching one of them at the high. What's up? Yeah, the B point above is almost hit. Didn't manage to grab that overnight, which is kind of intriguing. Not mhm. Nice.
You definitely would not have made that trade. So
Okay. We're about hitting the same blue bar that we've basically used the entire overnight session to make pretty specific beginning and end point moves. So I'm curious to see what kind of response we get from it. It's like it's intentionally come back to test this level. You know, no other move other than this one here looks very similar to exactly what it's capable of making. It could be interested in getting to the other side. This one here, perhaps, and that would put us at that 241. Basically, another short-term level that I wouldn't be interested in dragging any kind of stops above would be that purple line. You know, its need to pull back to it originally was pretty standard. When it broke beneath it, things changed pretty drastically. Here we are again at it, above it. So testing it's pretty normal, and no stops above it. Personally, I think no stop should be ever dragged above this line. Because like I said, it's a long-term line. It can involve a long-term test, and you know, there's no line that we have on here that goes back farther than that one that is of the same kind of line as that one. You know, that one's the longest term red-yellow line that we have on the chart. Now, of course, we're approaching the extreme of the blue bar. The blue bar was notorious for being used as a consolidation in the past, and it could be interested in using it again. This is a level right here that originally was, you know, something that we were talking about that isn't going to be important until it was used. Now we're above it and coming back to it. Everything that we do cross this high from that 261 and beyond could be a spike back to try and hit that purple zone. So we could have a secondary high in between as well. So that's something to be aware of. The blue bar undeniably had an interesting response. The 241 with absolute precision as well, and the major longer term fibs that have never been played out also, I might add. You know, this 241 that we just responded to all the way up here, that's never been hit before, and never, ever has it ever tested that B point that goes along with it. And it's interesting to see that the marker that we have here at the 227 marks the yesterday's overnight high, the close of yesterday. like we were looking at before, we could see that effectively this maneuver that we had in here was very much like a second wave. And it did this kind of maneuver here. I can't help but notice that when we were inside of the fourth wave, it was like a smaller version of the two kind of spikes that it made to make the continuation. The first wave was very much similar to the fifth wave. And so was the third wave too, ironically also very similar. So three waves that are very much alike, separated by two maneuvers, not the same in size, but the same in sequence. Becomes the case that the new high, well, yesterday's high, is an untested B point. Even on the short term, it's in line with the purple band, and we can assume that we are going to see a test of it. So far, the blue bar has created more consolidation in response of it than any other line that we have on here, and I find that a very particular line, and I don't really put too much weight on the 241 or 227. I think the blue bar holds precedence 100%. And remarkably, a lot has to do with this blue line as well. I can see on the short term, a lot of the moves that we've made have been tailored to making it even around that line as it has been working as a medium line since we have been consolidating in this node. It is true that in this node we have one spike and it is on the top. Putting it on the bottom would get us awfully close to the VWAP. Doesn't have to be next though. As I said, we could have a secondary high before actually making the turnaround. Yep. I know. I just got done saying I don't think that that's the significance of the situation. I think that literally the blue bar is where it's at with it. The 241, it's dangerous. It's all dangerous these levels to assume that they're just gonna hold like that. The 261 though, that's a little bit farther away than the 227, 241. They're kind of together. The 261 is actually running into an old range that we used to have there, where basically um, we could get a red zone and a green zone out of this environment. Could be interested in that. And it's like under no circumstances yesterday at any point did I ever say to sell the long trade because of this move that was going to come back to that high. Like think about how much is on top of like okay, this was the point where I was like we're going to get on top of it and stay on top of it. That means exposure is to be taken in this area down here. In aspirations of it being, you being exposed to the major break of the major trend line. And then effectively, the fact that it has to come back down to this point right here should not be an inconvenience. Because you know what that part of that is that's literally from 1300 up to 1600. Literally the end of the day, and it was taken back to noon. So by anybody that literally took any, like, you know how there was a red yellow line break here, right? That was a major red yellow line break from all the way up there. Literally anybody that decided to literally go long after this entire huge push up way late in the trade and still go for the break of the yellow line for the continuation, do you know that you're still in? Because it didn't come back for you even if you bought it at noon yesterday. So I'm like, well, at the end of the day, why would anybody have given up the long trade? And if you are in that long trade, well, you can see the benefit of having kept it. Because now, if you've taken that trade, like I said, to hedge it overnight, targeting that point in the middle, even if you took profit here, does it matter? No, 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 no. Even if you took profit here, and it doesn't matter that you missed out on all of this movement. But guess what? If you gave up your long trade, even if you gave up this one, then that means that you have to fight for it back. And God forbid this is too tough of an environment, right? Because it literally is toxic as hell. And I'm like, well, keeping it has always been the strategy. It's the hardest thing, the most inhumane thing to do, but it has been the only thing that I've said to do. You know, that move was meant to be a counter trend move, a hedge at best, not something that's supposed to be a keeper for the long term. And at no point was it ever supposed to be. It's supposed to be something that we step on top of. Like no stops are safe above this level because you're supposed to be long, right? At the end of the day, it's not even a matter of too long ago. I'm like, here we are at the beginning of a new year, and this is the beginning of a new week, and the expectations from the beginning of Friday and the beginning of Monday have amounted like, okay, first of all, even if you got in from this point at 9:30, that point has been one of the only points this week that effectively could allow you to be in, and it was late still. But anybody that kept their stops at the extreme of Friday's low, like literally where I said to keep them, you're good to go. And I mean, that was just on Friday, where it gives you exposure to be able to stay in for all of this movement and all that's beyond. And let alone if you're in from last year, you're even safer and even better position. And the name of the game is not to try and find the lows if you're already in, it's to try and find the highs. And now you're positioned exactly the way that the hedge funds are, effectively with a long-term exposure and looking for that short-term hedge to protect that long-term exposure so you don't have to sell it. Like, that's as simple as I can put it. Here we are again at the extreme of the range. The secondary high was made. Like I said, it could make a secondary high before even being interested in coming down. Why? Because it's more difficult for most people. Because it makes them quit, makes them get out of the way. It's true. So we have to make sure we're aware of that. New trends have been formed on people's ability to quit and find that they're going to get out of the way. It's tough for them. It's incredible once they do quit how much opportunity forms, and they never get to see it because they never know what it looks like because they're always quit, and that's the truth of it. And mhm. It's a long ways away. Let's take a look. Yeah, this high right here. It's almost like I can take that high and put it on here. And that comes through there. Could be in for a negative response of it. So basically, we know that there's no way that it can effectively test this level until it breaks the red-yellow line. And on the break of the red-yellow line, we could expect it to be interested in the B points that it has below, and of course the potential retest of that major trend. Of course, with it being such a major trend, it can take a long time. I mean, it doesn't have to be quick about it. That's one thing, and it also doesn't have to hold it when it gets back to it. Fall straight through it. It's another thing. So we have to understand that. And the 261 was blown right through, right? And it's like, what, did we get to the 300? Because, I mean, lately we have been. And where has it led to? The 300 has led back to the 261 very regularly. It went a little bit past the 300 there, interestingly enough, almost to the 341. But effectively, it's likely to make its way back to that previous high that we made there, yesterday's high, and of course the 261 shortly after. So basically, here we are with a small downtrend that we've created since we've broken this last one, and effectively it's managed to move to the low of the node. We've responded to the same blue bar that we were using multiple times throughout the night, and effectively that was the blue bar that we were looking at it coming back to overnight, and that kind of initiated the big dump that we had there. The relationship with that blue bar was pretty strong, and I can see that effectively played all the way back out to that support and to the moment that it broke the trend, the most major long-term trend that we had on there. Everything came back to the point at which it broke that trend, and we've been seeing a lot of that lately, where it comes right back to that point that it broke the trend. Oh yeah? All right, let's take a look. The hourly. This is where we currently are. I'm not sure what that is, but as far as the hourly goes, we can see we're, yeah, pretty much inside of that big volume gap now that we were looking at earlier. The same distance that we made from here, we might be seeing on this spectrum here too. I'm curious what that would actually look like. The B point up here, because there is a B point up there. And I mean, it just so happens that that would be the distance that it would need to get there. I mean, I'm just pointing that out. It is very, very intriguing. It is also true that, in the sequence of 5 waves here that we do have, it did pull back this much. And when it pulled back this, it's like, it's very similar. And then we have this potential fifth wave. Now, of course, that fifth wave, it does present a very high risk of, impacting this trend. And like I was explaining before, this general area of this middle zone, it's in the middle of where I would consider many different moves. Like out of all of the volume here, this is actually the POC. And it has more volume here than any other level. And at no point has this price ever been the best price to trade from. So that does, kind of like we were talking about earlier, it does put it at a very centralized area on the long term. We can even see that at this point here, it made it into an equilibrium. And it's like it's done that again with this bigger picture move here that we can see is very similar, um, ending right at this point in the middle. And it has been many times in the past the pinnacle of many triangles, like this one here. And I think it's going to be again in the future, but that's what I see in the long term there. Doesn't mean the short term's not going to have a lot of moves to take advantage of like it has had. Now it's true that the short term downtrend that we just looked at is breaking. Of course, like I said before, the arrows that point to this line are insinuating that it is a line that is untested. And of course, because it's such a long term line, um, it can take some time to get tested, of course. But when we break the red-yellow line, it's like opening the door necessary to begin that journey. But until we exit the current confinement area, it's very difficult to make any kind of advancement or call anything an advancement towards that level because this is basically the barrier that's holding it back. And yes, it's possible that with the consolidation that we've made, we can try and exert more energy to buy more time with that trend, and in turn making it more difficult for people to be exposed to the break of it. And some days you'd think that that was the mission of the market to make sure that everybody was very much in a tough spot to try and get exposure to the best thing that mattered the most. And, like that's like the theory, or sorry, more like the theme of the 11 low zone. Like when we have the 11 low zone and it's clear from the beginning, they get everybody rallied up in some pattern everybody understands, and then it chops and dumps, takes back like 78% of that entire push. And I mean, like, if the profit didn't convince people to get out, well, the chop certainly could, and if not, the dump that happens after could make people get out. And then basically when they grind that low, it's very uncomfortable for anybody that's caught the best price. But what's really interesting is that this is truly the best price in this sequence. And if it is something that goes up and offers people hope and, doesn't end up getting to the B point all the way, but then finally ends up getting there, I mean, this kind of maneuver that shows people hope and comes all the way back, it's another ploy on trying to get people out. And, we've seen this countless times happen on the daily lows and such when essentially the people that caught the very bottom made the market move like this when they were accumulating. And, I can see that it's very difficult for the people that aren't aware that it's happening. But if you understand it as part of a process that happens, it's a lot easier to withstand the pullbacks. And if you understand, like, okay, what is the best way to play this? Well, there is no better price to get than this one. And if this place is an area that I'm literally writing clear, and it's super clear because it's got, like, 188, it's like a falling wedge, it's amazingly clear and everybody's a part of it and everybody can see the value in being part of it, and you can see the market responds really well. And then when we get to that point, it's really nice to take some profit off and so on when it stops moving and secure some of the profit to pay yourself, of course, and then to look for a hedge trade against it. Because if you look for a hedge trade against it, rather than selling this whole position, then you can take profit in here. And you don't have to worry about catching any one of these lows because you're already in from the clear entry. Whereas when you're hedging and you take profit right here, yeah, it's not the best price to take profit or whatever, but you're roughly taking profit at the best spot that you can. Sometimes you might get lower, sometimes you might not, but you're not really too beaten up about it, right? Because at the end of the day, you've managed to take some profit off up here, you've got the best price, you've taken a trade against it and actually profit on that too. So like, for instance, if you've caught NQ at the bottom and you've managed to take some off along the journey, you're left with one, right? You've got an NQ from the bottom. You don't want to give it up. You can't do anything against it other than trade MNQ. So you take some MNQ against it, effectively bringing it down. When you take that MNQ profit off at that low, that's another form of paying yourself and waiting for the long-term low to hold so that you can actually get stopped out on your remaining MNQ at the high. And then you continue to hold your clear low from the very bottom. And every single high that it does make, you try and take that back down on MNQ, never selling that NQ, keeping it, and keeping it. On the trade that I say to keep all the time, every single day, I lose my breath because I say to keep it. So and it's like, when you keep it, you hold accountability for what you're doing. You're like, all right, I'm going to keep the trade, I'm going to manage it, I'm going to do everything I can to retain the value of being in from this extreme, and the only thing the market can do to change it is to make a new extreme past where I'm in. And when you focused on making sure that you have a hedge trade against that core, like I say to keep all the time, keep the core, keep the core, keep the core, and you make a hedge trade against it, it goes into the profitability of your stop getting hit. And if you catch an MNQ, sorry, M or a handful of MNQ at the high, and it comes down, and let's say it knocks out your core, well, remember that you're still in from the extreme. And when you caught and when you caught NQ to begin with, you weren't backed up by a hedge trade. You just bought NQ and took on the full risks of that trade from the get-go. Now, imagine, for instance, this MNQ took over and it's the only thing that you have left. Well, why would you sell that? Do you know that in the event that you try to capture this NQ and you're wrong again, you will make a little bit of money on this MNQ because you decided to keep it instead of folding under the pressure. So you trade against it, and at the end of the day, let's say for instance it takes a couple chances for you to catch this NQ before you're in profit. Well, whatever profit that you've made extra on that MNQ, you can decide to close it if you wanted to. It's an option that you otherwise wouldn't have. And you could retain all of that extra little bit of profit that you made while you were trying to capture NQ. And it's something that many people will not try because they have to intend for it to be a strategy that they're going to implement in the market. And how many people in the world implement that strategy? Well, the people on Wall Street, the hedge funds, the people that hedge the fund, because they can't sell it because there's not any readily available buyers, like I explain every day. Because if you have trillions of dollars, you have to find somebody to buy what you have to sell. And if you choose that that buyer is going to be the American public, don't be surprised if it overlaps your last year of progress. So that's really hard to get out of a position when you have to make everyone think that everyone is selling when you get out of your position. If you own 60% of a company and you want to get out, it's going to look like 60% of the people are trying to sell. Don't be surprised if the price falls. So what's a way to get around that if you know the price is going to fall? If you know your last year is going to be overlapped by decline, why not buy an options contract? Why not buy a futures contract against it and hedge your long-term exposure that you can't sell anyways? You're in it for the long haul because you want to keep that exposure. The institutions are in the name or in the game of obtaining, maintaining, or retaining exposure. But without obtaining it, they can't maintain it. And if they don't have the ability to understand what's going on, to understand how to hedge it, to understand how to maintain it, to understand the risks of holding it, and exactly how to take advantage of them, they won't be able to retain their profits effectively. And it's just they will have to abide by these laws in order to remain successful at the top. And I understand that, like 100%. So it's like it's really interesting because I think that they have an incredible impact on the market overall, and their agenda is incredibly important to me, and exactly how they position themselves for success is really important. So understanding that they do things in a very methodical way, and they have to explain their actions to somebody by the end of it. Like, I'm under the impression that everything that they do is explained in full at the end of when they're done doing it. And a large report by somebody else is written about every single action of every single thing that they've done, and it's like the minutes. But effectively, we've managed to make our way through the bottom of a triangle, and testing the triangle is normal. Allowing for that triangle to test from both sides, as a matter of fact, is actually something that we should allow. Now we can see that it's the case that everything roughly has been chopping within this node since we've hit the blue bar. You could say that the blue bar did initiate a consolidation. Since after all, our advancements have been halted for longer than not ever before, but since this point, it's been stalling out longer than it ever has. And I'm like, okay, that's fair. Could we make this consolidation without breaking the entire trend? Well, it'll be pushing it. It'll be pushing it. So I'm like, is it time to start preparing for what it looks like to break this trend? Well, God forbid things change on the other side of that trend, right? Because at the end of the day, they really can. They really can. And everything that we see is working well for the current situation is put up to the test on the break of the current trend. Because it's like, well, God forbid you take out the thing that's holding it up. Don't be surprised if it doesn't stay up. I mean, that's a very, very interesting statement. And you'd be surprised how much it can apply to the environment. And of course, we do have 3 consecutive lows here. Not an incredible positioning, I would say, for this pattern, as it is a reversal pattern, and it's meant to reverse lows, not highs. And it's not meant to continue them either. It doesn't mean it can't, but whatever it does decide to continue is subject to having major longevity problems, major problems with its being able to continue. Um, I'm just going to put in the chat that we did actually test um, the purple line. So basically, I just posted as well, notice that we are here testing the purple VWAP band. I think it is something to do with the baseline of the wicks and spikes. It was very common to use as support on the way up, so testing it is normal. The red-yellow line is very close, beware of its impending break. The blue bar we're using overnight got another test and has held us back from advancement for a prolonged period of time. And of course, we've got this B point right here, which, I mean, I'm not saying it's going to be considered hit when we do hit it. Like, this is yesterday's overnight high, and if you consider how much of a movement that we really had off of it, I mean, what fib are we coming off of? There's no fib, really, that's important. Like, the fib scale on this move right here is, like, suggestive that, these are the real fibs up here. 188, 200, 261 up here. Those are the ones that can actually I could consider this one cleared from. Not even this. This isn't even the 127. So just remember that. This could be like the basic flutter on top of a B point as we continue beyond it. Um, like let's talk about one of these other B points that we made here. Like a lot of them haven't had the flutter, to be honest. Like sometimes, like when we make a W, we like to make this B point and then it like hits it a little bit as we go, and then it's like, oh yeah, we'll respond to the normal level as well. But it does this little bit of a maneuver on top of it, which is fine. I mean, it's not the end of the world. To allow it to hit that spot is not that big of a deal. I mean, like, what's the appropriate ignition candle for the break of the red yellow line? Well, I see there is a triangle. We left the triangle, did a terrible job at retesting it. Could we double that triangle and hit that level? I mean, because I can't help but notice that, like, if we look at yesterday's movement, I'll just go ahead and take a picture of what we did yesterday, because I've since removed it off the chart. We did this. It was like, wow, that was incredible. We managed to take the first initial triangle, and I didn't start the triangle there. Like we were looking at this triangle and I was like, all right, clearly we're in a triangle. I took this triangle, moved it over here and I was like, wow, it fits. And then I put it on top and then I put it on top and I noticed that it was 3 of those distances before we started the consolidation. And again, it was 3 of those distances before we started the consolidation here as well. And it's a very similar kind of environment to what we had going on here earlier. Right now, we've roughly spent the same amount of time consolidating that we have here. So that could be, a signal that things could be ready for a change. Now, just because we've spent that much time going sideways doesn't mean we're going to have the same amount of impact. Because the thing is it's true that this is the same amount of sideways, but it's also from a level that's far different. Like if we were to do something here and then do something here, you know, they're two completely different levels, which may respond to that thing completely differently. Um, the blue bar has obstructed it. And between the blue bar and the yellow and red one, I think that it's meeting an ultimatum where it can't have both. It loves to respond to the blue line, the blue bar up here, and it loves to respond to the red yellow. But 5 minutes from now, it's going to have to have picked one, and it frequently puts itself into this kind of ultimatum where things must change. And I'm like, well, what is one of the most like serious things about this environment? Well, it's really serious about being here. What if that's the thing it wants to change? Because that's one of the most controversial things, obviously. It's like, well, obviously, leaving this little crappy consolidation is what everybody's going to be interested in. I don't think anybody's going for it to to move like this. It's not very lucrative. I mean, for whatever it does move, it does take back to the middle. I mean, what's the theme of this environment? Since we've stopped moving up, it's hit this point right here. And at that point, not a single movement that we've ever made outside of that time has ever managed to get away from it and stay away from it without having come back to it as quickly as it's left it to. And I mean, could this time that we break down the red yellow line or the blue bar end the relationship with this ridiculous level? Now, of course, this level has presented a heavy volume node, which we cannot take back. You know, there will be volume here and it will be the POC until we place more volume somewhere else. But it's not like we can take this volume away. We can put so much volume somewhere else that makes this area seem insignificant, but we can't take away the fact that right now this is the confinement area and this is how the volume is presented throughout the confinement area. So I'm like, all right, we just compile more facts of the situation, understanding that, you know, there is a current way things are. The way things are, everything comes back to that level. Now, with impending change around the corner, could we suspect that that could end? Yeah, that's what I'm looking for. I'm looking for it to change effectively. And I'm like, all right, going up buys itself a little bit more time with the red yellow line. Whatever time it does decide to buy itself, it may be just to try and make things even on both sides of the triangle. Now, we did talk about this. You know, it becoming even on both sides of the triangle is acceptable. It's not the end of the world either. It'll honestly look like more of the consolidation. Now, if it takes as long as it did here, up here, it won't be able to return back to the triangle without breaking the red-yellow line. So that becomes an interesting situation also. Now, if it takes too much time to do this, and then it manages to acknowledge some other area, like the high of this node, it wouldn't have much time to really show its acknowledgement because it doesn't have much time left. So we shall see what happens in about 5 minutes, where we could see volatility increase, where we could see us take the first step away from the medium point here. And one of the most attractive things that it could do is offer wicks and spikes at the high, to be honest. They could lead to the break of the red-yellow line and the B points that are left untested below it. And in the process, anybody that's obviously collected a short position inside of the bulk of this area, like, you know, this is basically evidence that the majority of the people find it acceptable to trade right in the middle of a consolidation, and that very little people actually go for the extremes. And it's or very few people go for the extremes, and the majority of the bulk of the people trade in the middle. And where would they put their stops if they were short? You think they'll put it up here? So attacking that high really quickly to get liquidity for the break of the trend could be on the table. Whatever wicks and spikes that we get on top of that triangle, one could be matching the ones that we've done out of the bottom, and two could be matching the ones that we've done out of the bottom of the node, and also potentially be interested in making wicks and spikes out of the top of the blue bar. The blue bar has been difficult to get out of the top of lately though, since we've been under it. And every single thing that we've ever done outside of the confines of this bar has returned back to it as quickly as it's left it. Now I do suspect that that is up for change very soon. You know, we have to start thinking, hey, it's less likely to continue this consolidation. We're closer to the end than the beginning. And these could be the finishing final moves of this consolidation before we're done with it. One part of me just thought about this, and I'm like, all right, in the event that we do get a spike out of the high that tries to knock everybody out of their short position, prior to the break of that trend, let's say it did that. Could it be the head to a head and shoulders? Like, could this be a left shoulder? I mean, it's an idea. If it is necessary to make that spike out of the high, this point right here could end up being a B point in the future for a really weird looking M. So I'm curious about that personally. The big downtrend. Hmm. That one there. I'll make it red so it stands out. Let's see if it is up here. Hmm. I'm not sure. Take a look. Yeah, it seems to be pretty adamant on staying at that high. The initial break of the red yellow line doesn't have to be anything too crazy, but it is this moment that it decides to make it the first break of the red yellow line. Having made roughly an attempt at an even spike on the top of the range or the top of the triangle. Sideways up then down. I call it a bearish pattern because it creates, or sorry, sideways down then up. I call it a bearish pattern because it creates an uptrend. Sideways up then, or down then up creates an uptrend. Sideways up then down creates a downtrend. And you can always connect that downtrend. And unless it is to be the downtrend that holds for an eternity, it is destined to break in the opposite direction. Like the whole idea of trend is your friend, like I'm 100% against it. Like I think that the next trend is your friend, not the current one. And people get it twisted because they think, oh, it's going up, so I have to be friends with up, so I buy into it when it's already up. I'm like, killing me. Killing me. Why not be at the beginning of something new, right? Hmm. Let's take a look. Let's take a look here. Oh yeah. Yeah, I see that. Because like, in the event that you could imagine this entire node, right? Let's say it's 1,000 people, and let's say that 1,000 people, they've managed to create this environment which has created like a lot of short sellers. Let's say, now let's say for instance, let's say those 1,000 people that wanted to short it all put buy orders right here. So let's say they had 1,000 buy orders right there, right? Because people have been allowed to short it. Now, let's say they have stop losses up here too, where that same 1,000 is is basically putting their shares up for availability to be able to be taken from them at that 1,000 point up at that higher point, right? So we know that, like, let's say you're an institution, if you start to dump now, you're gonna have to buy out every single 1,000 person that's trying to take profit before you get to your profit target. So let's say you have your own or let's say you own 2,000 yourself and you wanted to take it down to the profit. Oh, so you wanted to take it down to the profit target, and you've got 1,000 people in the way. Do you know that you're going to have to buy that 1,000 out before you get to your target? And you're going to literally have half as much of your position to take off there. So it's like, yeah, you might be right and everything, but you have to buy out all of these people before getting to the target. So why not say, all right, you know what? I'm going to come up here, grab this 1,000, turn mine into 3,000, come down here, and then take it. Because at the end of the day, you can count on the fact that with each time that we gyrate at the high, there's less and less people trying. Less and less people obstructing our ability to get to the V points down below. And the more and more and more of this we do, the less and less and less that 1,000 becomes in our way. Because they're not in our way anymore. Because at the end of the day, they give up. Because they're their own boss. It's true. And I see this every day. And I mean, like, then it becomes the domain of who is left, who has survived, the way I see it. And it's typically the institutions that have to remain managing their assets until the end of the day because there's a risk that the people can start a snowball effect that effectively, basically, if that's the biggest risk to the institution is if they lose control. It's all about maintaining that control. They've already obtained it in order to be in the position that they're at, so they have to maintain it and retain that control in order to be able to stay on top and keep that influence. And effectively, this is a ploy at trying to get all of these people that have traded in this area. Where do you think they're going to put their stops? And you think they're going to try again and again and again, you can count on the fact that every single time they make a new high, I think it's about 30% less people consistently until the end of the day. Because nobody decides that they should start working towards the end of the day. A lot of people, they start at the beginning, like a job, and they look at it as beneficial when they end early, and it's not the right business though to do that. Very interesting. But you can see that they literally went for the stops, and I could make that very clear. The wicks and spikes out of the high of the range are now something that we are seeing. Testing this blue bar is something that I guarantee will happen. I am very much in the business of getting back to it like we were before. Could it be like a cheeky method of doing it? Like, look, we were guaranteeing that it was going to come back to that line yesterday. But instead of breaking out to it or breaking down to it, it broke down through it. And I mean, what does it matter for the people that caught the short and were waiting for it all night? Does it matter that it took long? No, 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 no. What matters is that it hit every single target that we put on there. So it's very, very interesting. Spike out of the high of the range, coming back to the test of the blue bar. Very small movement, of course, but one day this may be the hourly. Just like it was on the NASDAQ hourly chart here, where originally, we had another blue bar that we were really interested in, and it literally moved just back to it with absolute precision. Um, and there we go. So I'm like 30-minute, looking at another blue bar to get back to the potential value of holding this morning's position. Incredible. We weren't even through the break of the downtrend yet. So like, and that trade I did never say to give up ever. Never, 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 never. And if you're worried about like, oh, how do I hold it through this weekend? I'm positioned from here. Should I do it this way? I mean, like, for it to be the decision to just be like, the weekend's coming, I'm gonna cut it. Like I literally think that's a wrong decision. So it's like, I'm like against it 100%. Like you're doing it the way that I think is the wrong way when you do that, right? So it's very, 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 very. I'm very, very strict with holding accountability to it because I'm like, okay, if you give up that position because you think it's going to be easier to have a nice weekend, you've just signed a contract saying it's going to be difficult next week because you don't have the extreme anymore. And I'm like, I wouldn't do that. If you had to go through the experience like 100 times over, you would say, "Oh my goodness, why am I doing this to myself?" Because it's preconceived notions that it's going to be easier for you to go through your weekend not having a position. It's very interesting to me because it's human to be like that. And if I explain it like this, you might think, "Oh shit, I'm like that." Like it's like I have been too, and I'm like, "Wait a second." I realize when I'm like, "How could I be better? This is what I'm doing. How can I improve? And what could I have done differently to have been better? And can I do it next time that this environment arises?" And I'm like, "Well, that's one of those things." It's one of those things. I'm like, it true. It's and I mean, it's not like it was an easy lesson for me to learn, but I'm like, it doesn't have to take so much time for everyone else to learn it. We can all just understand. It's like, all right, well, it's easier for us to start the next week having been in from last week's extreme. It's always the case. And the more of an extreme it is, the less of a reason you have to give it up. Because the more of a reason you have to hedge it and keep that accountability. It's true that if it ever is to continue beyond the point that you found it risky, you will make money if you decide to keep the hedge. Or sorry, if you keep the core. And if you hedge it, any money that you make on top of it is a bonus, and you don't ever have to worry about that direction again. Now that's the beauty of it too. Many individual traders wake up every morning wondering, should I go long or should I go short? And I hear it all the time. I'm like, they're like, is today a long day or a short day? You know? And I'm like, just to brand it as that, to make it easy. It's like, oh, am I going to sit back and just watch a long day or a short day? And I'm like, well, at the end of the day, yeah, there's days that move in one direction very frequently. We're getting a lot of them. Um, but, to just have no information on what it has been doing, and just to assume that maybe it could be a long day and you like the idea of it, so that's what it is. It's based off of feelings and it has no concrete background, right? So I never would take action on anything like that. But when I go outside, I can see that many people do take action on feelings just like that, and it's close to a whim, and it's not concrete mathematical information. So I like to compile, factual information about the situation and then understand what is the best way that I can find exposure to that. What's the best way that I can find exposure to the most profitable moves in the environment? And typically it involves, looking at the long term and getting an idea of exactly what the big picture play is. Right now we're super centralized and it's hard for me to believe that, in the future, like I said the other day, this is a good way to explain it. I'm like, imagine you're, going about it all and you're like, all right, a year goes by and it's like, oh yeah, look at this trade I made. I went long from here. I mean, like, what? Really? It's like, really? What about the other times? You know what I mean? Here is tough. And I'm like, well, people can get really convinced about the fact that, this is a good area. And I'm like, well, let's say this was the 1 minute. Would you ever be like writing home about the fact that you caught it here? Or let's say you shorted it and you caught it at here. I'm like, I'm dying inside. It's not the best price. It's not where the people that made the reversal, that decided, they understood exactly what was going on, and this is exactly where it should reverse instantly for their immediate profit because they knew what was going on. That has never happened for these people. It's always been tough, and it's like I'm just stating that as a fact. It's not the fact that it has ever been the extreme. Every time it ever was an extreme, it was overlapped with twice as much movement in the opposite direction, making it incredibly uncomfortable for anyone that positions themselves from this point. And I'm like, well, God forbid we continue consolidating, it will only be more of this. So I'm like, oh, interesting. Well, oh, this is not a long-term chart, but yeah, at the end of the day, um, the way that we positioned ourselves from the beginning was to have yellow lines going down, um, Exposure to them led us to the green. Once we got to the green, I formulated the red, and we talked about the idea that the green zone may be used with the red zone. Now, I'll tell you one thing. What we've managed to do is remarkably similar on both sides in the terms of we've taken this amount of movement and we've put it on the other side almost exactly. And it's like, that's not even what I was looking at. Originally, I was looking at the fact that when we came up from this low, we came we came up and we made a consolidation. And that consolidation I find suspiciously similar to the one that we made here. When it ended, that consolidation showed us that its amount of consolidation and built up energy amounted to it being able to move this much. We currently are about that much away from the tip of the triangle. And it's like the consolidation can go on. At the moment that I can see that it is necessary to end the consolidation, it's huge red flags that come up, and then we can see the need to essentially stop everyone out, and it's a huge squeeze that basically I think will turn into a spike. We've come back to test the blue line, but we're not getting away from that blue line again. It's coming back to it. Every single bit of movement that you see on top of the blue line, I don't care if it goes for 100 points, it all comes back. Every single bit of it. If we do this again, and I don't think it's going to take this method of going up, then sideways, and then when we hit it, it goes down. I think it will actually come back and hit it normally. Because what it wanted is it wanted people to have the guts to hold it overnight. Because it didn't start dumping till 2 a.m. Eastern. And you want to know what's funny about that? Is the American public had nothing to do with it. No options traders, no stock traders, no bonds traders, no nothing. So who decides? It's another footstep to the cookie jar on Wall Street, in my opinion. The derivatives traders on Wall Street. It's interesting um, that there's not more commercials and so on about derivatives trading and everything like that. More awareness spread about it. Um, because it undeniably has more it's more accommodating to the average American. Yet if they have to make it past all of these people trying to sell them things before they can get to futures contracts, which is interesting because you gotta push the mutual fund managers out of the way, the bank managers out of the way. They're all trying to get you to buy GICs and mutual funds, and if you get your money tied up in there, then you're not even going to think about other opportunities. And then if you get your money tied up in stocks and ETFs and so on, you know, yeah, you won't be day trading until you put in more than $25,000. A lot of people, that's a lot of money to put down on something they've never done before, on just an idea or maybe a few YouTube videos. And then I'm like, well, it's incredible what leads most to begin to feel compelled enough to be able to put money into the market uh, against all of the people that understand what they're doing. It's very interesting. But like I say, the one thing that I believe, is you never want to act on anything that you don't understand. You always want to act on intentions and understanding. And the first thing to develop an understanding is to get the facts of the situation straight. Like that's the name of the game. And right now, like there's certain characteristics that we can see, the market is adhering to. One thing that I think is really abstract that most people are not going to be aware of is the blue bar. The blue bar, I think, it like I said when we got to the 241, I said it wasn't really important. I didn't like the 227. I didn't like the 241. I don't like any of them because I don't think they actually matter. What I think matters is the relationship with the blue bar. The fact that we strayed all the way back to it and started chopping at it is what I think it shows incredible importance. And at no circumstances do I even think the fibs had any kind of confluence. They weren't even confluence in this environment, which is interesting because that can be the case. And yeah, sure, there might have been fibs up here as well, and I'm like, well, that's fine. But I can see the need to come back to the blue bar is one of the most interesting environments, and that's pretty much all I could talk about ever since we were even crossing the high. The need to come back to that bar is the name of the game. We've done more than make it even. We've made it double what we did on the bottom. And now, what's beautiful about that is that we can then make this even out of the bottom eventually. Perhaps with some consolidation. After all, making one spike and starting a consolidation can offer another spike on the bottom. This is the true retest of the blue line. One of the most bearish moves that I think that we're going to see today at some point is when this purple line extends beyond and we come and hit it, break it, test it from underneath, and then dump. That that could be the end of this environment, and it has to do with this line. And when we break that line and test it from below, we will be interested in this one, which is the VWAP. Direct correlation with that line. And I'm like, well, hold on. Let's take a look at what happened last time we used these lines. Last time we did what I think we're going to do. Well, we were grinding it, and it was support, and it was good. It was riding that purple line. And then when we broke it, everything changed. Like everything changed. It couldn't trade like it was. I tell you one thing, it was after hours, sure. The market closed here. But it also decided to change its relationship with the purple line at that moment. And that's interesting to me because at that moment things did change and they were never the same again. And undeniably, that's when it began its journey to the white line, when it broke the purple one. So I'm like, well, can we get that again? Yeah, we could definitely get that again. I do like the idea, to be honest. And I think that everything we've done up here is very much like a fifth wave, very much like a spike. And I've noticed that in the most bullish environments, it is very, very imperative that those that have caught the fifth wave must take profit as some profit at the fourth wave, because we've noticed they can do this. This is a method of advancement. I don't think it's necessarily prone to happening now, but in the event that it does, I'll be damned if you didn't make it safe to continue holding, because what if this happens and you're up now? Don't let them take that, right? So at the end of the day, not to say that this is the most high probability trade in the world and that you should have even taken it, but if you did, then that's the way I see it. Like spikes often have springs, and in the event that it has a spring and you're not in at the very extreme, would you be contained within that spring? So that becomes another question. It's like, yes, you may have caught the spike, but did you catch the extreme? Because if you didn't, are you contained within the pullback? What if it makes a 61% pullback? Would you be in and safe for it? Well, let's say you're in at the 61 and you've taken 3. Well, do you know that if you take 2 off at this point right here, then it has to go this far beyond in order to make your last one a loss? So what is it to put your stop at the extreme? Is it not true that you will still have this much profit banked even if you get stopped out with an extreme? You will be guaranteed to have one contract regardless, so long as it does not make a new extreme. If you repeat the process, do not be surprised if you have the extreme by the end of it. Now, at the end of the day, it becomes, what is the value in catching the extreme? Is it even worth it? Well, at the end of the day, like I said yesterday about yesterday's move, and I said this very clearly multiple times, yesterday's downwards move is not worth catching over the move to all-time high. The move to all-time high is the number one trade. That's the core position. Everything else is a hedge. And if you come in every single day without a core and you focus on taking the hedges that, basically I say that you can be taking if you have a core long, It's not the right way to do it, ironically. You have to wait for the next core, and that can mean patience for waiting for when the market offers that next extreme, that next opportunity to fight for that long-term position. And it might involve a few short-term entries to gain exposure to a long-term trend, and that's fine. But at the end of the day, you have to know whether or not it's worth fighting for. Just like this high, is it worth fighting for? Is it going to turn into a core short position that's going to last for a long period of time? I don't think so. I think that yet again, it's just another good hedge, and the people that are positioned from the bottom will undeniably have a better outlook than the people that try to catch today's reversal. I think it's good for hedgers, not so much good for shorters. People that are shorting without it being a hedge is undeniably a lot different. Like let's talk about it for instance. Like let's say for instance you have an NQ contract at the bottom, right? Or even right here. It doesn't matter where you have it, but you're in and you're up, and you're long. And let's say for instance you capture MNQ, 5 of them, short, and it comes down, and let's say you make money. You can sell that 5. You can sell 3 if you wanted to. Keep 2 if you wanted to, right? But you're going to be profitable if it does that. Let's say, for instance, it doesn't give you any opportunity to take profit on that 5 at all. Now that's 5 contracts, each moving at $2 a point on the NASDAQ index. That's half as much value as this. This is worth 10 of these contracts. Okay? So this 5 position is worth half as much. Let's say you lose on it. You're only making half as much. You're not actually losing money anymore. So let's say, for instance, you're in on the NQ and you lost on this 5 right here, and you lost. Let's say you lost, you got stopped out a little bit. Well, remember, this is worth 10. You have an option at the moment that you lose on that 5 to cut this whole thing and cut that whole thing, and you're up on the whole endeavor. But you don't have that option if you're just in here with nothing and you don't have anything at all and you're still trying to take 5. If you take a loss on that, you're not making any money on anything because you don't have anything to make money on because you gave it up to try and short instead. And it's the toughest thing. I'm like, why would anybody want that? I mean, like, only if you could see it in a little bit more of an advanced way, we would fight for the ability to retain that long-term exposure, to be able to take 5 contracts in the negative direction and actually lose on them. But the only way you can lose money on this, and I'll tell you right now, is if you take 5 contracts on this high right here and you lose money on it, and then you take 5 contracts again at that same level and also lose money on it as well. Then you'll catch up with the 10 that you're making here and you'll be flat. If you did it again, you would then lose money. So it's true that you have 2 chances to catch this high when you're holding your NQ. You don't have to take the full 5 either. Do you know that if you took 3, you would have to lose 3 times at the same level and you'd still be up by 1 contract? You'd still be up by 1 contract because you'd lose on 9, but you would have 10, and ironically, it would be like you had 1 MNQ the whole time that you were losing trying to catch the reversal. Literally, so many benefits to hedging. People don't even know until they try. Absolutely incredible, you know, and like I just like I don't want it to be unclear to anybody. It's absolutely insane. Like another way that I could explain it without it being NQ and MNQ, like let's say you had 10 from here and you were able to hedge against with 5, at the end of the day, this 10 can be up all the way up to this point right here. It's making you money. Let's say it's up $1,000 and this would be like $1,100. All right. Now, this losing money to this point here might lose you $50. So you might be down $50 on this move. But from this point here to this point here, you've made 100 on this. So in order to lose money, you actually have to take this trade again and lose the same $50 to catch up with the 100. And then you have to do it again to lose more so that you're actually down. Why doesn't everybody fight constantly tooth and nail for this position, for this way of trading, for this core position? You know, that's what I'm in the business of. Nothing else. And every single day it should be, how much did your core advance, guys? You know, we're looking for a hedge here today, right? You know, because we're in. From now it can be Friday, because that was the low worth fighting for. The low that took all day. The low that was tough, that pulled back so many times. Like, remember my 11 low zone? Like, remember my 11 low zone? Like, how do I depict it? Let me type in 11 low zone real quick here. 11 low zone, right? And then we get these little pictures everywhere, and I'm like, all right, this is the schematic. And I'm like, all right, you can see we have that like clear entry at the bottom where it's like, okay, we'll have some sort of pattern like a falling wedge, and sometimes I write clear like I did. Oh my goodness, I can't write on that. But yeah, I'll write clear in there. And that's like this point right here. And we start up, we're rallying. Everyone gets to see the raw power of the market in the morning. It's 9 o'clock. Everything's moving really well. Everything's breaking. Everything's happening. And then we get up to this high and it makes a chop. And then it comes down and threatens nearly 75, most of 80% of all of their profit, right? And then it pops up and gives them hope. Pops up and gives them hope. It's like, hey, you can do this. And then it's like, smash right back down. Took everybody that tried to catch the retracement back out. Cruel, right? And then finally it's like, hopefully you kept your position, you know? It's like, these people still have the best price. Hopefully you could handle all of these pullbacks. Because, you know, in order to be able to be in from that price, you know, you have to have a strategy that allows you to be in for pullbacks in order to be in for the end of it. You have to, or else you're going to be in from a different shittier price that's not the best price, and it's true. So I'm like, all right, well, don't give that price up. Now imagine this. Imagine you were in the business of holding this, and the moment that you held that, it got locked and you couldn't sell it. Your computer program just locked it in. It was like, this is your core. You're fired from the firm if you give it up. You're not allowed to sell assets. We don't sell assets here. We only make more money on hedges and buy more assets. We're only allowed to buy assets. That's it. And then essentially it comes down, you're able to hedge it, you're able to hedge it, you're able to hedge it. You know, even if you're using half the amount of your core, you've made this amount of money from here to here to here, and then you can cut it in half and say that's how much you've made. So literally, let's say you were using half the amount to hedge it. Well, you've profited this amount of points on your whole core position. So if you cut that in half, your position has earned this much more flexibility, because you've literally profited halfway down that move. So you can afford for it to move down to there before you're in a loss again. Not to say you should literally put your stop there, but damn, can you ever afford to put your stop here? You know what I mean? I'm like, seriously, it's power, control, you know? And it's like, people don't build the marble paved Wall Streets on, without control of their power. It is true. And they do it this way. The people are absolutely oblivious. They're part of it. They're part of the sequence, and their role is to remain oblivious. And ask them. Do you not think that the people at the top would laugh at that and say, "Yeah, of course they're literally meant to be oblivious in the name of our success every day? Of course they are. 100%, 100%." So very interesting to me. And of course, we've come back down to test the blue bar yet again, and that's absolutely okay. Well, we're coming down to test it, should I say? Not, we haven't done it yet. And it reminds me of a 11 high zone almost. Like, and when I say 11, it's like because it feels like it. If you've ever caught a multi high zone or a multi low zone, that's another word that I use for it, and it's basically it's so tedious that it can feel like you're doing it 11 times, and really it's only probably going to be like 5 to 7 times or something like that. But if you've seen how many times that it can break the trend and readjust it, it can seem like it's taking an eternity, right? And I find that it's good to prepare for 11, because if you prepare for 11, then you'll be pleased to see that it only's done 7. If it only does 7 lows and you're prepared for 11, well, you've still got plenty of energy left. You know, it hasn't started to really make you feel like it's even taking a long time, because you're prepared for much longer than it's willing to even do. And that's me. I'm like, yeah, you know what? Here's 4 hour consolidation, takes 2 hours, that's a bonus. At the end of the day, there's only one way to end them, and that's by breaking the confines that are containing them. You know, and when we exit that confinement area, we can expect it to have new characteristics and potentially form a new trend. Yeah, well, I think I'm gonna change the music up a little hardcore. I think basically breaking that purple line that we're stepping on is a major part of the process. Getting underneath it to test it from the underside could be one of the most bearish things, like I said earlier, that we could be looking for. After all, the spike that we did have had a spring. Like I said, if it made a 61% retracement and you were part of it, I mean, like, it basically is saying, hey, unless you shorted above that 61% retracement, we don't want you in, or we're going to make it difficult for you, or you're not in for the best price. That's basically what it's saying. And I'm like, well, whenever it's the case that you are positioned from somewhere that could be a 61% retracement, it is that much more likely that you are accepting more risk than if it wasn't that way. Now, we do have a new downtrend. It's not exactly like, the most important one in the world. Dim it down a little bit to show its lack of importance in this case. Beautiful movement. We're underneath the purple line. Excellent. The value was that we did not break this yellow line, and now it starts to become a little bit more attractive as we get away from it. Destruction.
Right to that 261, eh?
Yeah, the old 261 just
Right
got
to it.
spiked. Yep, basically it's like it's taunting them, Like back in retrospect, those people are gonna look back and think, damn, Everybody that shorted at that 261 was presented with a lot of difficulty on the other side of it, but it just came right back to that point that they shorted it. And a lot of people still that are in from there they have the audacity not to take profit. Or it's not that it's profit. They don't cut the break even after being so wrong, so long, they still hold. It's human. And I think that if you're ever put in that position, which you shouldn't be because everyone should use stops, but that the market has basically blessed you with the opportunity to get out of your position at break even and to try and hold on to something that was so wrong for so long and then assume that it's going to be good for you. I'm just like, it's not good. It's good to start afresh. So that's what I say about that point. In the event that it comes back to somebody that's offering it's offering them another chance and they don't take it, and this is what happens. It comes back and it tests the underside of the purple line, and that could be one of the most bearish things that it does. Like I said, the underside test of that level is an incredible requirement in the series of movements that we have here. It is the case that we've managed to take the entirety of the movement that we did on the top and produce it out of the bottom. Do you remember at the beginning of this conversation that I was like, hey, it could make a spike and then the circle, and then we make a spike out of the bottom? This, if you look back in today's recording, that's exactly what we were looking at, and that's exactly what it did. Now, what's funny about that is this entire downwards movement could be taken back in the aspirations of getting to that purple line, and that would look like, a spike. And if it did that, that's absolutely fine. If it doesn't, I'm honestly not going to complain. It's not something that I would say you should trade towards trying to get, but if you are short, then dragging your stop below this level is suicide. That's basically what that means. I mean, like, sure, could it be like a wave 3 right now? Sure. Is it true that this has never happened? No, I mean, of course it has happened. So I mean, like, could we make a fifth wave and then come up? Well, is this honestly too much? It's not. It's the same thing, really. If you think about it, yeah, there's a little difference in there, but what's the result? Okay, the result is we take a trend line from the high to here, and then we take a trend line from here to here. They both break. They both go back up. And at the end of the day, I'm like, okay, that's fine. It's not like this trend's not going to break. It's going to break, but when and where is the key. And first step in getting to that, the first step in breaking it is getting to it. Of course, you cannot break something without interacting with it. Um, you would think, right? But it's true in this case that you can't break a line without interacting with it. It's just a fact of the matter. So we understand that. We don't need to think about it. We see it clearly. We know that that's the mathematical fact. Now, the other thing we know is that there's space between now and our ability to interact with that thing, which is the yellow line. So if there's a plenty of space between now and that thing, what could we fit in that space? Becomes the next logical question. And I'm like, well, plenty of things can fit in that space. What other appropriate things have taken that amount of space, and could we fit those things in there? I mean, like, is that not a good thing to think about? I mean, it would seem so. It would seem so. I would think so. And I'm like, well, if we are to look at that, well, is it an appropriate area for it to go sideways? And when was the last time it went sideways? And would that fit within this area? And could we allow for that sideways movement to exist within this area? I'm like, yeah, okay. It could do that there. That's fine. What about the retest of this major downtrend? Are we in the process of doing that, or are we just taunting the people of the 261? Because hey, look at how little it moved at that 261. You could say that it gave them nothing, right? Like, it gave them absolutely nothing. And this is the level they showed us worked last week. Yesterday it might have worked. I mean, it might have even worked today at some point. But man, is it ever not working there? So I'm like, That's an interesting fact. I'm like, well, okay, as much as I like that level, it's not working. So we have to understand that. And I'm like, well, what about the next time we see it? Are we at a 261 to this B point down here? It looks like we are. Wow, that's actually remarkable that that is the case there as well. The 261s are aligning. The work of the public, I'm like, it's so hard to make it line up. Like imagine you were the almighty powerful being behind the market's movements and you could decide exactly the way that it should move. I challenge you to make a like without lifting your finger off of the key, make a 261 and then have it come back down and line a 261 up the same way without using fibs, without taking your finger off, and show me when you put the fibs back on that every single thing lines up, and tell me it's not difficult to do that, and tell me that it's the work of the public, and all of their random nature of not understanding how the market moves and all of their disarray and you know what could you say? Well, we all know how they are. At the end of the day, it's it's like they're you can mask the public across this entire broad view of saying, well, if everything that they looked at made them successful, more people would be successful, right? And I'm like, well, it's the case that there's a lot of these things that the individuals seem to feed off of, and they don't seem to benefit them in any way, shape, or form. It just makes you more of an individual. And I'm like, well, there's things that are like that, like CNBC. And I'm like, well, going to the bank and asking them for advice. That's another thing that, like, really, it's like buying a ticket to the individual wagon, I guess you could say. Mm. And it's like, if you want their results, then you do as they do, right? And I'm like, well, it is true that across the broad agenda that they don't have clarity, and that the market does provide absolute precision if you look for what it makes precise. Now, it is true that we've taken this exact movement right here and we decided to make that the case right now. We did that movement right now to do this. Now, we haven't tested the purple line yet, but it doesn't mean we won't. At the end of the day, if we do, I said it was bearish, so never thought about avoiding it. In the event that we avoid it, is it less bearish? Hmm, that's one. That's a question. I actually want to say yes in a weird way. The pullback up could actually affect things a lot worse. Like, think about how it is constructed, like a left shoulder, a head, a right shoulder. Oh my goodness. When we were in this, I was talking about it being a left shoulder. You can go back and look yourself if you want, but I was. And it was literally in that point, and I was like, well, we could make a spike through the top and it could end up looking like a head. And as butchered as it is true that we're left with a high, with a higher high and a lower high, and that did make it come down effectively through the purple line, which hit every target that we had on here. Yet again, all the targets have been relinquished. There's one that remains down below, but I needs time. When the VWAP reaches that B point, it will be ready. You see the rate that it's coming up. It's not always going to work like that, but it's the way it's going to work right there. Now, it's interesting to me to see that it decides to, since we've made this high, we can agree that this is the high, this is the beginning of the downwards move, this is the start of the downtrend, And I'm like, all right, since that start of the downtrend, when we do a counter trend move, how do we do it? Well, we do this. You could say, oh, we do this as well. And I'm like, yeah, you're right. It's true. That's like a smaller counter trend move. We do that. And it's like, when we're not doing that, we're doing this. And I'm like, okay, that's cool. And we just did that. So, is it true that we have two counter trend moves of similar size separated by one and then two, which is like the largest? And then what if we get this again? Would it be the perfect 5-wave move? Because at the end of the day, it is true that this first move down started the consolidation, which was that one. Then we had third, which is the largest, the fourth, which is this move now. And if we make the first move again, we undeniably will be at, where will
Yeah,
we
okay.
be? Yeah.
But trying to go along on this downslope here is kind of like eating table scraps.
Oh yeah, man.
You
It's
know,
brutal.
you, I know I've been there and it sucks.
You know,
You know,
what
it's like, why didn't I catch it on the bottom? You know, rather than try to deal with table scraps on the friggin' on the opposite side, on the other end of the
see,
market. That was just crazy.
it's true. It's true. That's the. I know. And I'm like, one day I know it's gonna make people hate me for saying this, but I'm like, that's the price for not holding. I'm like, it is true, and I'm like, here we go again. He says it again. I'm like, yes, it's true. And I'm like, next time, I'm like, and I want everyone to show me. I'm like, you show me, man. Now, everybody show me that you can hold the extreme. Like prove me wrong. Because I'm like, I'm starting to believe it's inhumane to be able to hold the best trade. Yeah, the market throws 95% retracements back at you, but it doesn't mean that your extreme isn't as valuable. It's literally the best price, and until it takes it from you, what things can you do to prevent it from being a loss in the event that you get there again? And I mean, hedging it is number one. And it means that you have to watch two things at once. It means that you have to look at both directions at once. It means that you have to develop an unbiased opinion about the trade that you're in, because like literally I make a trade and then it goes and it's profitable. I take profit off, pay myself, and it's fine. Now I start thinking about everything that can go wrong with that trade, and I'm not allowed to sell it. Anything that you can do but sell it. And it's like, this is, I wouldn't be surprised if this is what some of the best firms would task their best traders with. It's like, we don't want to give up our control in the assets. We love being able to fire the CEO. We have so much control in this company. It's great. But we know, with all the information that we have, because we own the company, that things are going to go south. And what do? We hedge it. We take a huge hedge position out on derivatives that don't show up as volume on our security, so nobody thinks we're selling anything. And then it dumps. Maybe we even sell off a little bit of the assets first while we have the hedge position going, so it trickles off. Everybody thinks there's huge selling. It's like, no, 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 no. They're just really taking a little bit of profit. And then the hedges start to really benefit. This is totally illegal too, but it happens every day. And how can you stop these huge entities from taking advantage of these little opportunities that they find throughout the day? And I'm like, well, it's very, very difficult to stop them, I think. It's very, very difficult to prove that they're even intending on moving the market. First off, you would have to understand how they move the market. You'd have to understand how they intended to benefit off of making trades that would move the market. And, they could always respond with, we didn't know it was going to do that. And it's very, very interesting. It's so hard to fight against that. Because how do you know? How do you tell them that we knew you knew? I'm like, okay, that's not a good argument against their 100 lawyers that they have because they have all the money. It's not an easy fight, so they just let them win, I assume, at this point. It's kind of interesting. But this is a result of seeing the footsteps. It's like, where'd all the money go in the marketplace? Well, went to Wall Street again. I'm like, yeah, it's true. It totally did. As they're like slowly pulling their hand out of the cookie jar, it's like, well, it wasn't us. Totally was though. Every time. And they win every time. Or you would see more losers out there, and they're not the teams don't lose. It's the individuals, which is really interesting. And from time to time, sharks will eat other sharks, but the ones that are at the top, I think they have 80% of the market share. And I think they're syndicates. So, which is brutal. I wish they weren't. But there's no way that it's all ethical. And hopefully that changes, Hopefully there's more good people out there that take control. And so that's what I'd like to see. But they're a formidable enemy. But I look at them as my enemy, 100%. And it's like the one thing that poses the most threat to them is when the control when the individuals can band together and retain control, and it's almost like it's designed against it. Like every trading platform and every single thing that anybody does with trading is so individualized. It's very difficult for the individuals to band together. And when they do, it's typically led by the news articles, which will be ran by the companies that own most of the companies in the world. And don't be surprised that they own the media too. So I'm like, all right, well, they do influence a lot of what the public sees and thinks and all the information that they get. And I just think it's really important to understand the way that they do things. And I know that they come in every day thinking, hey, when we make an action, how are the public going to respond? That's what they think. How are they going to respond when they see us do that? You know, they have to think two steps ahead. The individual is not even thinking about the fact that there's other entities that are even doing this to them. They just think it's other individuals, as lost as they are, battling for extra money on top of their job. It's like that's not the case, though. This triangle is very similar to the triangle that we've already had. I find it also in a very similar spot to what we did. Now, do you remember when we made a consolidation on the green zone and it went circle and then it went down and it up and then it did the same circle again and it did that kind of maneuver around the bottom of the zone and then on the top of the zone? That was my point in there. I was like, oh, notice that same circle happened below the green zone and then above the green zone, separated by our wonderful S wave that we see happen so many times over, just, everywhere. And like effectively that right there, now that we understand it, we go up here and we look, and I'm like, well, do we see anything of the sort here, perhaps in reverse? Well, I do see that one consolidation is placed here. We moved out of the high to come down and then make this consolidation here. Dividing it is what? The POC. It is true that on the one side we have this consolidation, which marks the top of our POC. On the bottom side, we have this, which marks the wicks and spikes below the POC. It's interesting. When it comes to a level that needs a lot of attention, we've seen that it can do this kind of maneuver. And even when we meet the red zone with a big punch, to come test it from the other side is incredibly normal. The yellow line broke. The fifth wave was truncated. It didn't actually manage to break through the 261. But whatever it is doing, it is making the right shoulder apparent. Many people across different time frames, such as the 5 minute, will start to see the development of that right shoulder as it matches the left. And I mean, that's absolutely fine. Effectively, go ahead and look at that on the 1 minute again here. We can see that it chooses to run into the blue bar. Could this effectively work as a consolidation zone again, like it did last time, or are we testing the purple line? Purple line was supposed to get tested, and it is getting tested. Now that it's tested, we do have a B point down below. It is true that we've managed to go from one side of the range to the other. Now, on one side of the range, it is true that we managed to make a spike and it had a spring, and that ended right there. Now, when we did that, we went to the other side and did a very similar maneuver and placed that right out of the bottom of the range, and that's a fact. We can either accept it or neglect it, right? So I'm like, out of the top and the bottom, we decide to make these maneuvers. Now, within them, this is one way that we have decided to make everything even. The 61 becomes of an interest as well because we are close to it. Looks like we're at the 50 right now. So do you remember at the moment that I made this solid, it was when we were down here and lunging away from it, it became more of an interest. Now notice that everything from that point has been taken back as a spike. And it is the case now that one movement that we've had out of this high has amounted to making us stray out of the top and the bottom to come back to the middle. And what we're left with outside of the ranges is remarkably, similar on both sides. New trend from the bottom. And we're at the high of the range. Not sure why this one. I guess that is kind of like off a little bit there. Honestly, I don't want that trend on there at all. Curious about some of the other ranges that we've been using. Let's take a look at this for a second. Last thing I drew on this one, I do know that this one was a major level. We can see that that was absolutely used. We were using this for the projections yesterday. Yeah, there's not much else on there. Trying to think here. So this amounted to this much movement. Okay, when we did this before, it amounted to this much movement. And then it spiked and sprang down just to make this movement here. And I know that's not exactly the same as what we did here. Jeez, that's very similar. Okay, so the components that we had here were first the consolidation. The movement. You know, so basically take this movement here to here. Same thing. When it dumped off, it did this. And then when it fell, it did something different. It didn't do just that. It did more. But when it was done, it did from this low to this high to this low. And then it amounted to this much movement. Small difference with this little area in the middle. Yet remarkable how much is similar. Analysis. We're making this one. We're making more than that one. Hey, keep in mind that there is barriers here that we have respected for many, many, many moves since the point that we made this consolidation relevant. Like for the lack of relevance that it had yesterday, you can see it's made up by literally rallying all the way back up to specifically this level. And I know it's not just a specific fib or anything like that, because every move starts and ends at the blue bar since we've been associated with it. You know, it's not even just since today, but definitely since this moment, since the moment we tested it, it hasn't been able to get off it. It's stuck in the mud. But you could say, since the moment it existed, it hasn't been able to get away from it. It's only gotten better at making it return to it in a more extreme way. Like it's only become more extreme at returning back to that level. And at the end of the day, it is only getting more difficult to return back to it. But what it was good for is large distances, not short ones. Now it seems to be doing short distances. So you can see the bulk of the volume is within the same amount of pullback, which ironically that amount of pullback has been something that we've been interested in doing for a prolonged period of time as we've pulled back that much, you know, very frequently. It's been a very frequent pullback. You know, the average counter trend move. This is interesting too because it's true that with this 5-wave move, it went 1, 2, 3, 4, and cut the 5 off. But by how much? By this much. By the same amount? Interesting. Because I only say this because we are in 5 here, right? And we've done 1, 2, 3, 4, 5, which is the same thing, except a smaller version in reverse, which is quite remarkable in my opinion. Huh. This move right here, it's a move that we've been seeing a lot of lately, which is kind of intriguing. I do find that that can be an incredibly effective reversal pattern. Like, you can kind of see it actually try to, not like now that I'm like, I saw it, I'm like, well, there it is. I'm like, we saw that there. Now I'm like, well, is it here too? Is like got that kind of like, it's kind of doing it. Jeez. Yeah, it's kind of interesting. Hmm. Yeah, even in here, like his preliminary stages, the confinement zone. Oh yeah, and I guess I could have been looking at the whole thing here too. But that's different. It's intriguing how much it's managed to push that out, this trend. If it is what you're looking for. You could say no advancement has come without the two pumps and the pump. But at the end of the day, we can see that it struggles at the same spot, making it even on both sides. It's so intriguing. I'm like, how? Because of people's awareness of this, I find it so unlikely that they are that precise. Especially if they just, aren't even looking at the charts. Half the people, in their investments, they're just, you know, nothing to do with the charts. And they all find a way to fit in to this. So it's interesting. It's like, are they insignificant to the people that can keep it in constant technical flow, like where it's constantly moving from one technical indication to the next? Or like, where do we find time for the mindlessness of just buying randomly, at 12 p.m. because it's when you buy shares, you know or when the batch of mutual funds are bought every day, but somehow they get fit into the absolute precision that we see here every day. Somewhere they're buying in, and you know, either when they do it, they have no impact because it's not making the technicals not work whenever they make their decisions. Like, you can't see where the mutual funds are making their decisions. It's not random movement at some point throughout the day, but it's all contained within absolutely, you know, respectable technical levels. When it stops at something. There's something there. When it reverses, it reverses because of something, and you can see exactly what that is. And that's what the chart is for. And when decisions are made, like to buy TD Bank because the dividends are increasing, and you don't even know when you're going to get in, you're going to be filled tomorrow. That's Like when is their time? When is the time for those billions of dollars every single day? Or have the people at the top amounted to have, like, do they have that much control that they can keep it constantly moving in technical analysis at all times? Because at no time can any move be not explained by technical analysis. There's always a reason for what it's done. Like there's always like it's like, at what point can you find it not doing this, not doing this, not doing this, or not doing this? At what point can you not find it doing that? Okay, I guess you could say this one here too. And any one of those patterns can be flipped upside down, so that doesn't count. I'm not going to draw them all upside down, but yeah, you know, effectively, which one wouldn't? At what point are we not doing one of those patterns? It's an interesting concept. At what point are we not in the sequence of making one of those patterns? And it's like, well, because you might see it doing something absolutely crappy on the short term, it doesn't mean that it's not part of something on the long term. Because it's like, you might see that, oh, this entire range right here is like all this chop and crap, but is it part of a second wave on the hourly? Or a fourth wave or a fifth wave on the hourly? And everything that maybe an individual is looking at is just narrowed down into one small area, and it's not considering the bigger picture. So, and it's like, just because we see 5 wave moves, do we think that they're supposed to work? Like at this point, this was 5 waves, and it only came back down to the fourth. Do you remember when I talked about that today already? Because there was a time today that I mentioned the fourth wave can be the only point that it comes back to. And if you don't make sure that it's safe by that point and it does this, deja vu, right? Because I did this already today. And at the end of the day, if you allowed it to stop you out because it pulled back to the fourth wave, you lost your long position. But if you didn't take off enough profit on any hedges or short trades by the time it hit the fourth wave, then what did it do? Well, it didn't do it exactly the same way, obviously, but I'll leave this up for a second, and we'll take a look at what it did do. Well, it went 1, 2, 3, 4, 5, chopped out, and didn't allow anybody to do anything. What was the next thing that it did? 1, 2, 3, 4, 5, chopped out, didn't allow anybody to do anything. What was the next thing that it did? Huge run up, and then what? 1, 2, 3, 4, 5. So in all reality, is this that much different? Because throughout the experience here, we can see that there was 1, 2, 3, 4, and 5, and 1, 2, 3, 4, and 5, and 1, 2, 3, 4, and 5. And they all managed to fit in to this environment. None of them went down past the fourth wave. It's interesting. Interesting fact that that's the case. Oh, when we ended the entire trend, that one thing that worked really well ended. We were able to overlap the entire last portion. So it's like, okay then, when we do 3 again, should you try and be buying into this one for it to happen again? Or is there a risk that every point that you buy in on this one, it gets taken completely back almost instantly? I mean, like, well, yeah. I mean, it kind of makes sense, especially if you've got the same kind of move as you had here, coming from the bottom bit. I mean, like, is it not true that it's very similar to just making an S wave. And I'm like, well, is this one way for it to do an S wave? Can we understand this is some way that it is physically and it's capable of making this possible as an S wave in the future? It doesn't always have to be this big, but it can happen on the short term. It can happen on the 1 minute, or no, the 30 second. It can happen on the 5 minute. It can happen in the long term. But it's really interesting to understand the breakdown of exactly what's happened and how 5 wave moves effectively have been showing us that, hey, they don't work, hey, they don't work, hey, they don't work. But they do sometimes. But what was the difference between this one and the other ones, you might think? Is it not true that when we were up here, we were also high? Is it not true that we were high here, though? But we were even, it's it's funny because we were able to break down levels that were already high, like this 261. It seemed to not matter, and we blew up to levels that were literally off the chart, right? Like we went to over the 361% retracement on that B point. And what's funny is that B point, it's not like it's over yet, because that B point's really not been hit off of any one of these levels. What it has been hit off of is this one. So to say that it needs to get hit truly off of any one of these levels is telling us that it already has been hit and we need to see it get hit again. Because if not, how not then? Because it has been hit before. So I'm like, well, it's true that there's some B points that make it to the 261 and they haven't been hit off the 161 like that. They haven't actually ever been, relieved. But this one actually was. People have actually traded back from that 161 and taken profit at that B point. Whether or not we have the experience of doing that is one thing, but it's true that it could be considered finished because everything that we did on the bottom of it was presented on the top, and it was very much like a W. Like, I know it wasn't very like the prettiest W in the world, but it actually was a W. Like I could draw in, if you want me to do it all proper, I could draw it in like this, and it worked out really well. So it's almost like, can we blame the 261 for not really working? Well, what's really interesting about that was, if it doesn't matter in the future, why would it make it into a support? Well, the people that didn't, that wanted it to work the way that it always does, they were presented with it working instead of resistance as a support. It's a little weird, but it's true. And I'm like, well, I mean, we can see it as the way we like to see it, or the way that it is, and very much, I think that it will help the future to understand the way that things are, not the way that we'd like to see them. And when you understand one strategy, you understand the way that you'd like to see them. And you can continue to look for that. But if you understand the way that it was, it can be a lot easier to find a relationship with the market than it is to look for the same 1930s strategies to work the same way every single time that you see them in perpetuity for the rest of your life. I'm sorry, but it won't work that way. There will be times they will fail, right? And just because it's the sake of the pattern, or the pattern shows itself, it doesn't mean that it's going to work. It has to be in the right environment, in a fitting environment. Sometimes the fitting environment for that pattern may change, right? So this B point's been hit, and we've got a new one up top. So it's quite interesting if you think about all the ramifications. We've increased volatility to the point that we've undeniably created a triangle. Now this triangle, it's different than your average triangle. It certainly is a high volatility triangle. It's nothing similar to the ones we've been used to be honest. We can see new characteristics. The speed is key. One thing I'd be interested in seeing is if it would ever be interested in actually getting to the B points properly again. Like just get there right off the get-go, like no funny business. Because it's been involved with so much funny business. Like, oh, yeah, I'm gonna make an M, and it's like, here's the target, and it's like, oh yeah, 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 just like that, and I'm like, well, hold on a second. I mean, did they just do that right there again? That what is this little bit right here? That's what I mean. That is what I mean. The shenanigans, you can call it. But it's not, decades have went by and it hasn't done this. You can look back in the history, it's not been a characteristic, but now 2024 comes around and we're interested in doing weird things like this. Now all of a sudden you notice that not all of them have this problem. It's the ones that are going in a certain direction. And wait a second, it can't be that easy. It has to be both of them having the same problem, not just one side. But no, it's true. The ones coming up seem to have this problem. Like they seem to give you a lot of trouble. It's like look at this one here. I guess no, that one didn't do it. See, the thing is, they all end up getting hit. Okay, like for instance, the experience of these people were kind of interesting. They come down, they have a B point, they didn't get it. They had to experience a new low to get that target, which is kind of cruel if you think about it. Um, and it's not uncommon, but I'm like, who would ever make the pattern not work the way it should? Could you imagine any individual waking up successful after 20 years of trading and then decide that the strategy that they've been using should suddenly change and they're going to do everything differently all of a sudden? Have you ever met anybody that's like that? So, why would unanimous decision of all of the people in the market decide that five wave moves should ever not work? It's very interesting to me because if you look on Google, there's one way these patterns should work. And when they don't work that way, I have reason to believe that most people are affected negatively. So you're not in the business of only finding what opportunity looks like, but understanding what danger looks like too. It's huge, huge. People can't see past their own wallets, that they can't see the fire in front of them. You know what I mean? I'm like, it's just like, hold on with the greed for a second. Let's figure out what's flying at us at 10 million miles per hour, and if we can avoid the problems and see the opportunities at the same time. Because for sure, first it starts with understanding what an opportunity looks like, so that you can find problems with it. If you don't understand what an opportunity looks like, you're going to struggle to see any problems. You might think a problem is an opportunity and so on, and that could be a tough time. So at the end of the day, we're coming up to hit this B point here, and it's effectively made a spike out of the bottom of the triangle. And it's funny because it didn't get all the way there. It didn't get all the way to the B point. Sorry, it got most of the way. But I noticed this. That's why I was like, is it going to do it again? And it did it again. And I'm like, ah, who would want this? And I'm like, it made me think. I'm like, if you've made this pattern work for so many years, suddenly you wake up and you decide you want less profit all of a sudden? Is that what you want? I'm like, nobody wants that. Who would decide the pattern shouldn't work? And more than one person you would think would have to decide it not to work in order to make it fail. And I'm like, well, do you think everybody's just getting lazy with it, not getting all the way to the targets or something? Or is there so many people that don't understand how the pattern works that they're preventing it from getting to the target? I'm like, makes me think. Makes me think. But one thing I've recognized is there's certain targets that you can expect them to treat like that, and there's certain targets you can say, oh, they're very likely to get hit, and other targets are not so much. With this one, what are the ramifications here? Well, first of all, I mentioned the one most bearish thing that we could do is actually test that purple line from the underside. Now, I know we've kind of made a triangle around it and everything, that's fine, but it doesn't mean that one of those underside tests of those purple lines can't bring us all the way down to the white line. which is like what it's that, it's the same thing. It's the same indicator, is what I mean. They're definitely related. Like this is 1.61 standard deviations away from this VWAP. This VWAP is the average price since the point that I put it down. And basically, like, what I mean by that is that this is like an average price of our range. Of all the contracts traded, anybody that buys above that line is typically getting a worse average price than anyone that's bought below it. And anybody that buys below it is in theory getting a better deal than anybody since I placed that line down. And I mean, it's an average, of all of the contracts traded and where they have been traded and how the volume is distributed. But basically, it can work like a medium level, and we can look at how far away it likes to stray from that average. Now, we can go ahead and take a look at one in the short term too. Like, let's look at this one here. We can see it presents different lines altogether. As we go about the range and it increases in volatility, we can see that the lines expand as it gets used to using them at the extremes. You can find that testing the underside of those bands, in this short-term environment, wow, let's look at this. Hold on a second. I tell you one thing. I didn't even know it would be like this, but what have I been saying about that top band and its relationship with the middle? Is it not true that... Sorry. I think something was like... Mosquito was like biting my leg or something. I don't know. Maybe like a spider. I don't know. But let's see here. The VWAP band. It's true that when we left the original VWAP, it came up and it started like riding it like that, eh? The top one. And then when it broke back down, it tested it from the other side. And is that not when the biggest, largest downwards dump happened? Is it not true that it was off of the test of that purple line? And is it not true that yet again we were presented with the same thing and we tested that line? It's almost like it was obstructing us from making a fifth wave. And it did it on the bottom and on the top. And everything amounted to it coming back to the medium level, the mean, the VWAP, the comfort zone. And I'm like, wow, that's a small picture. If you're looking for what I was basically saying could happen in the long term, you can see it literally happening on the short term. And I'm like, wow, that's incredible. But one thing about the triangle is, it ends at a visible spot. Like this tip of this triangle, I mean, typically we don't go all the way into the tip, but if we do, I mean, it's impossible for it to be any more than that triangle. If it is, you know, uh, more of a consolidation, it may make another triangle, but it will never be more than this one, because this one is very specific. It is these two lines and nothing else. If you draw a triangle like this, sure, you'll get more space, but it is entirely a new triangle. Yeah, you could say that it uses one side of the old triangle, but a triangle is three angles. If you change one of the angles, you get a different triangle because it has different angles, and that is the mathematical fact of the situation, right? It becomes a different size and a different shape and everything. So if I'm like, all right, what's the next consolidations triangle going to look like? Are we going to have this one or this one? Well, it depends because they are, as a matter of fact, completely different triangles, even though two of the angles are exactly the same. So it's just good to understand that that is, the way. That is the way. There's no way that we can change that. If the triangle has a different line, it is a different triangle. And at least that's the way I look at it. And it has a different time at which it can end, but it might have different characteristics as the first one because it's allowed more space, it's allowed a sloppier angle, and these things can change things. They can change a lot of things. I tell you, the steeper the trend, the more energy it has to exert in order to maintain it, or else it's forced to break it. So it's just a good way to look at things. And when we know that, triangles are prone to getting wicks and spikes out of the bottoms and tops, well, is it not true that if we extended every single triangle that ever made wicks and spikes out of the bottom and top, like let's say it was violent and it made wicks and spikes and it made wicks and spikes, you know, and I just was like, all right, what we're going to do is we're just going to extend the triangle down and extend the triangle up. And now, instead, we've got an extra like hour within that triangle. We would notice that it would actually use that time more. But it's true that within this time, we're typically interested in actually leaving the triangle and ending our relationship with everything that we've ever done inside of that triangle. And in this case, it's kind of interesting to me to see that it makes an expansion into the contraction. And I mean, well, the one beauty of this is we can assume that when it's done the contraction part, that it will be done this entire area and it can leave it. Maybe we can look back and see the last time that it spent this much time and this much space at any given level, how big of a move came after, and could we be interested in anything remotely a similar size? It's like I know that down here we consolidated in a minor congestion area for, you could say this amount of time, but then you could look up here and you could say, oh, what about that time? That time was a good time too. So we'll look at those times and we'll look at what they mean for our current consolidation. Roughly, it's not going to be down to the exact moment, but you can see that this is the original time at the very beginning that we've been taking, and ironically, that's how much time we've spent up here. So could it be that at the end of the consolidation, at the end of this triangle, it's a sufficient amount of time to make a pretty drastic move? Oh, another thing that I find really interesting, when we make an M into a W, like I was mentioning earlier, these 2 points can be similar to these 2 points, but what about the distance too? Like, can we sometimes see that the distances can be, I know in my sketch it's not, but can they be? And I'm like, well, of course they can be. Like, what about this distance here? Were we undeniably made like, this W-like pattern, right? And we know that's at the bottom. It's at the beginning of this entire sequence. And now all of a sudden, we make a move that has this upwards thrust, we're looking like that. I mean, that's half a move away from looking like an M. Is it not true that inside of this confinement area that we had to make the B point, we are making that move as well? Is that just strange or what? And I'm like, well, what if we, because right now we have this. That's effectively what move we have. If we did that, we'd be at a 188 200 and a 61% retracement of the entire move. Hmm. And that 61 might grab that B point. Let me think about that for a second. Well, yeah, it would, wouldn't it? But the triangle needs to get retested. It would be ideal. If it doesn't, then it would have to come all the way back to get it, and that would be something that it might be interested in doing as well. I think that this is going to be the last trend that will break for significance. So even though when we go back to test the triangle, this line can easily be dragged down to that. And I mean, does it change much? Not really. Not really. Mhm.
This we have like 3-4 times here.
Oh, you got one right here, eh?
Yeah, right there.
Oh, that's interesting.
It's from a few days ago, I think.
A few days ago.
Or
Okay.
maybe a while ago. Yeah.
But it's barely moving, like it's flat.
Yeah, it's definitely flat. Flat as a pancake.
Okay, so that's long term probably, yeah. Which is interesting. I mean, I tell you, that's an interesting point to have a mean.
Three, four touches there, right? So.
4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 touches, are right? So. 4 That works at the low of the node there basically as well.
The bottom of it hit the 30 on the 1 minute RSI too. So didn't really come off a major fib. I mean, short term, sure, but I had to come down to a 241 from that M up top.
Mhm. 241. I wonder if the B point's the 61 or not. Yeah, it is. That's so weird. I don't know why it does that all the time. It's really strange. It's a mathematical phenomenon. You would,
261, you would think, right?
yeah, the 261 should come back to the. Well, it's weird. Is like it's pretty much also there as well. Like if it made it to the 261, it wouldn't really take the 61 off the B point, which is interesting. That's why it's like anywhere between the well, actually, it's weird because it's absolutely precise the way that we currently have it now
Yep.
at that low. Yeah. I mean, it's notorious for getting back to them. I cannot recall a 241 and 261 that had a 61 as a B point where it didn't get back to it lately. It's been like a characteristic. And I wouldn't suspect many people to actually understand it to be in its way, so I don't, I think the only reason
Well,
why it,
you're probably wondering why it stopped there, but you could use the confluence of the 1 minute RSI if you have the right settings of what we have.
yeah.
You know, I mean, they've been golden for me big time.
Oh,
The
these are
2 minute
interesting.
RSI and the MACD.
Yeah. So this the 1 minute one is definitely pulling back up to test the long term. So
Sure is. Yep.
and I'm like one thing about the long term though, it's getting hammered though overall. Like the ability to pull back, each pullback, it's going to be a lot sooner that we get to that orange line, which is going to look like a lot less of a pullback. Like by the time we get to that purple, or yeah, by the time we get to the B point, it'd be very likely that we're trying to touch it. And then with the next downwards turn, if it falls at the same rate that it's been falling, it'll be roughly in the middle. So each gyration that the blue line gets off of the bottom green, it's going to mean less and less as the orange gets lower. Then it'll likely be how much higher can the blue line go than the orange. But I mean, it's been a while since we've been at the
We've
bottom.
already hit that B point A from the 188 200, and it's trying to get it again, I guess. To that M.
Mhm.
But it seems like we're just cruising around the middle here and just trying to figure it out, triangulating, yada yada.
Yeah, M's into W's.
Yep. Yeah, they're easy plays, but I mean, it's just not many points now, especially with the ATR. Well, ATR is decent, 7.5.
Yeah. Yeah.
Another characteristic, when the market goes up, is it? I know it's kind of late in the push here for today, but every time it hit the bottom of the 1 minute RSI, it's off major fibs and stuff, but it still went up to meet the orange line on the RSI because there's space there, right?
Yeah. Take a
To
look.
demonstrate the same as the cloud on the MACD. When the cloud is empty and we know we're going up, then it's going to come back up.
Ah, yes, that makes me think now though, is like we literally have the bars going below the middle line and it's that's like danger zone now.
Yeah, of course. We know that we're just stuttering. We're going basically consolidating, going sideways when something like that happens.
Yeah, but now
And
things are getting worse every moment that it goes sideways, essentially.
yep,
Like this sideways, I'm like this side. I'm like, what sideways movement? It wasn't even going sideways there.
well,
But
you look at a completely different environment. I mean,
mhm,
when we started off this morning, the 15-minute was low. So when it's low and you got an
mhm,
empty
mhm.
cloud, yeah, you're good to go. Well, you know we're going up.
Yep,
You know, if you didn't catch the bottom, and it's I've seen it to operate the same way when we're coming down. If you have an empty cloud and we're coming down, it's a decent entry if you don't get the very top. But when we're in the middle, you'll notice that we start getting clouds below when we're going up. But that won't be safe for more than maybe 10, 20 points. It'll come back down and sort of jump into itself. Saw that yesterday, so you see it today.
makes
It's
sense.
just not the same, you know, when the 15 minutes up high like that. It's you know, a bottom cloud. You know, you get the lines coming in through here and stuff, and you just have to be careful. And if you're thinking about doing any, you know, just short-term longs here, you know, because you're going to run into that 15-minute barrier. So
Yeah, and now it's like as time goes on, it's just basically making it more and more difficult for it to break these
we're
barriers.
coming off the 261 here, the very high, right, to that major B point yesterday. Whereas we kind of went down off, I think 220, 221 or something like that.
Yeah, this
227,
261
right?
here.
Yeah, overnight we were just 227, right?
Mhm.
So we're coming off the 261 now. So let's just see what this does. You know, but you look at the hourly, it looks like it still may have some ammunition to go up. So we'll see. Look at the hourly MACD setup. If you saw that on the hourly, or sorry, on the 1 minute, you'd think we're still going to go up, continue to go up. So,
Mhm.
but it just makes sense that there's a pause, that there's a bit of a downward motion. I mean, the 15 is right up there with the hourly, and you know, on the RSI. So
This giant trend line has never been tested as well, so could be interested in reaching for that at some point here.
so what?
Because
You have the blue arrows there.
yeah, yeah. Yeah, not necessarily to say that it's like, the number one target or anything like that, but it is something that I think it's incredibly unsafe to drag stops above. I think that that level not being tested could be something that we need to test. And I look at it like this level here, like we step on top of this level, no steps are safe above this level. That level right there is where we got today's high from, the 261 at the top. That 261 that you were just talking about is to this level where I was like, we step on top of this level. When
Oh
we
yeah, it's way down there.
Yeah, when we were breaking up through this area, I was like, we're gonna step on top of this level and no stops are safe above it. And it's because this could have taken down or this could have taken it down. Any given time, any of these levels could have been the reason to get this point. And I knew that before we even got above it, that this level would become the B point. Like let's look at it.
Yeah, this that's like 200 points down, 200 more.
Mhm.
Yeah, 250 somewhere there.
Yeah, this was the day right here. 921 January 8th. We step on top of this level, and this is 921. So the market just opened here. They just want. Okay, so yeah, that was yesterday, and I was responding to this message. I woke up and this is what was in the chat. The only thing really that was in the chat, and basically the S&P could crash by 30%. Recession is underway. Blah blah blah. Interest rates might not fall. Plummet 30%. This guy said it. He knows what's going on, right? So, at the end of the day, we had a we had a I was like, they just want you to eat that crap up. This is the progress we have made on stepping on the top of this level. Anyone that kept their stops at the extreme is still in. If not, I'm interested in finding an entry. Days like today are interesting. I mentioned last week we may start higher because of the fact that we could start the week on a squeeze. People would try to short this pop, and they think, because they think they're late, and we will effectively destroy them, is what I said. And this is what the market decided to do after I said that, stepping on top of this level. And that was literally the move the market had in response to that post. And
My internet gone there, I think.
oh, whoops, was I cutting out? Can you hear me?
Oh, there we go. That was a bit weird.
Oh yeah.
Could you hear me or no?
No, you froze for a second on my end. That was a bit weird.
Oh, okay. Well, let's see here. Oh yeah, sorry. So I was just gonna look.
Or comes out on Thursday too, right? Early in the morning, 6:30 or 8:30, I guess. I think it is.
Mhm.
Yeah, 8:30 Eastern.
So basically, before that that post, whoops, the post that was on January 7th, to start this day here, right? January 7th. Uh, and that was on Sunday. Okay, so leading into the end of the week last week, it was clear that let me just take a picture of the post before this. Here. So, I think the gold bar above wants to be the new popular mean, just like we were using the blue bar since the end of last year. The blue bar, I think, is getting some of the last responses before it's interested in the yellow bar above. Short-term blue and white line also appears, right there, so it can increase volatility in the short term. So basically we can see from exactly that point, like there's no better point to be in from than to get those wicks and spikes in that bottom to target that blue line. That's what you're going for, right? Targeting the blue line. And this is what it takes to be in for what it counts. This is the end of the day, literally. What time is it? 2:56 when I posted this one. 2:55, sorry. At that point. Okay? So this is what it takes to be in for what it counts. The downwards move was bullshit. A hedge for big money. Watch the assets continue higher into next week. It was hard for people that didn't hold the long-term core. They're all here trying to catch it instead of holding the hedge from the day I said it would make a meltdown. I'll have a video on it this weekend. I've worked on it a bit, but this year starting off to a great start. I urge you to be a part of it. I'm still making that video, and it's off of this year's all-time high, which I was like literally it's going to have a meltdown. That's what I said. And it didn't even happen right away. But that was the meltdown. In comparison to what we were used to in pullbacks, that was a meltdown.
Have a look at the 1 minute MACD.
Converging?
Yeah, but not only that, but the empty cloud there on the top
Mm-hmm.
where you could have entered. I mean, even the marks before that were, the 1 minute was very close to the 15 coming down on those other two highs. That's also an indication. But
So you're looking
if
at
you
it in
can't get past
reverse.
that,
Like
yeah,
like the
exactly.
clouds are on the top and the bars are
Yep.
not through it.
Yes.
So until
Yes.
the bars go through the medium point,
We're still going
then
down.
right. And it's funny because we haven't even started going down yet, really. Like
I know. I know.
hardly. Like it's only
Oh well.
just come back to the 261. I mean, like this is the point
Yeah.
at which it inflicted the most pain on the most people, I think. Right here. And I'm like,
Yeah.
this is where most people got screwed and they need it to come back to that point. And I was telling everyone, I was like, from this point they have the audacity to keep holding most of the people, and they go through this thing and they decide to sell on this instead. That's when they sell out. I'm like, they short here, they hold the whole time, and then sell out on this push because they can't take it anymore. And we're closer to being able to break that level than ever before, which is interesting.
I'm not saying, when you look at the 1 minute RSI, I'm not saying that 15 minutes going to come all the way down to the bottom before we close today. It may just come down the middle and then you'll see the 1 minute go past it. But I'm just saying that
Hmm.
the way the cloud is this morning or this afternoon with the MACD, you never saw that in the morning. You'll never see an empty cloud in the morning or an empty cloud on top when the markets are going up. You just won't.
Interesting.
It'll always have lines in it. Always. You only see empty clouds when the markets come down on the top
Hmm.
because
And
it
like,
is down.
yeah. So I'm curious then, because this is a line that would be subject to breaking off of a 5-wave move. Something should be wrong with it then, in theory. Because it just did that and showed everyone, hey, everybody, if you want to take a trade that matters, then be interested in this move, and it'll
Yeah.
produce the entire thing. And now it's like, is it different from the moment that it was there? Like, I think something has
No, what's
changed.
different is 15 minutes lower.
Hmm.
15-minute RSI is lower.
Well, and it doesn't have or an empty cloud on the top.
No.
Yeah. So let's see what happens with this. Could be a fake break.
Yeah. Yeah. This could be like D leg to a W, and then you'll see the 1 minute past 15. It's just up here. It gets a little dicey with when it's got up like 150 points and it's going sideways like this.
Well, the entries for the MACD at its best cannot be when everything's congested around the
Oh hell no,
middle.
it's not
Yeah.
around this area. I'm not saying it's around this area.
Yeah, yeah.
I'm just saying normally when the markets come down, you're gonna get like 2 or 3 entries in the afternoon of the day or whatever the deal is when the markets start coming down, and that's when there's an empty cloud on top.
Mhm.
Because when it goes down, all the lines are pointing downward, and when there's a bit of a retracement, you think we're going up.
Hmm.
It's not pulling the lines up; it's only pulling the cloud up. And when the cloud starts going the other way, it starts coming down, and at the peak, that's one confluence, and you want to be very close to the top of the 70 on the 15-second RSI, and maybe even be at the top of the 1 minute RSI. But I'm just saying, or you're going to be basically seeing the 1 minute RSI come up to the 15 and sort of meet it there. But and hopefully that's a decent fib. Like it could be a very short term fib, like a 188, 200 or whatever. But I've seen that lots.
Hmm.
Just to add a confluence. I'm just trying to use these
Oh.
indicators and stuff.
Yeah, so aside from the MACD, one thing that I find interesting here is like we were able to come down off of this test without having hit the purple and without having actually the blue actually meeting the orange. And now we've
Mm-hmm.
gyrated almost all the way back up to that high, and somehow we're about to touch the orange.
We are. And we have divergence. We have bullish divergence there too. See that on the 1 minute RSI?
Yep, it's true that this is even going up on the MACD too, and this is going up on there. This is going down.
Yeah.
Um, so I'm
We still
curious.
may go down further. We still may go
Curious.
down further, but I'm just saying.
The idea of
We're
it
not there. I'm
being
saying
a fake
we'll
break,
end on a
though.
five-way move, though. Yeah.
Yeah, it could be a really crappy ending to it, though. Like I mean, it did just show everyone a nice crispy one, and I think that they've been notorious lately for making the ones that that people expect to work for them fail. You know, it's like everybody sees it work out. Now they try it for themselves and they get a completely different result. I think that the last thing that we're going to get is anything like that, to be honest. So let's see.
I'm thinking maybe it just takes time to like form in this volume node. Because if you look at the volume node from basically maybe back to about 12 o'clock or something like that, we're basically still in the red zone of the volume, right? And we're we definitely have space to go up, but it just may go back and forth from blue line to blue line within the red zone. Because the
Well,
longer it stays here, right, it builds a node that it's just used to and gets tired of and wants to either go down or up.
yeah. One thing that's true is there's no move that doesn't end at this level. Like it's like everything that we've
Mm-hmm.
ever done is always that, you know, came back to this point while we've been in this consolidation. And you know what's funny about this point is it's never been the best price for any of those moves. There's always been a better price. Like if you think about it, it's like okay, there's an area in the middle and like you can trade out from it, right? But it's true that if you look at the areas that it has made outwards, they have offered more movements from the outside than what you could ever get from the middle. Could you ever get any one of these moves from the middle? Well, the best that you've ever gotten from the middle would have been this trade here. And I'm like, well, at that point, what's interesting about that point is yes, it was a bigger move, but it was made overlapped instantly. So the people that were part of that move were made into losers instantly. So it can't be the best price to find value in. Because the people that find value at the best price that aren't overlapped actually, you know, they actually exist. People target those levels and they're actually meant to reverse at those levels with intention. You know, many people do not believe that that's the case, so they will never end up with those levels. You know, so that's the interesting part about it. But if you settle for less, then you'll end up with less than the extremes, and I think that you know, when you do find a trade that is very valuable, don't be surprised if it's put to the test many times. Like think about what happened to the people that caught the extreme. You know, how much of a retracement do they have to have endured in order to maintain in at the best price? And it has to be, yet again, part of their strategy to be able to maintain a 78% retracement, you know? So every $1,000 that you make, you watch it come back down to $200. And they have to be comfortable with that in order to keep the best price. Just saying. Same thing goes for the low. Same thing goes for the very, very, very bottom. Same thing goes for every other best price that you can ever find in the history of mankind. It seems to be this way. Everything is put to the test, you know, and I'm like, well, the matter is we can either have a strategy that allows for the pullback, that embraces the pullback, or has a negative impact from it. And I'm like, well, the best thing, you know, like remember the 11 low zone, where if there is a clear entry, you know, you expect it to get a pullback, right? And if you hedge that pullback and you take profit roughly in the middle, doesn't mean that you're catching this low, 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 and trying to manage your stop, sweating buckets over the entire 11 low zone as it offers you pennies the entire time. And I'm like, or you could have just kept the best price. Yeah. And I'm like, well, at the end of the day, it seems to be tailored to those that have the strategy of keeping the best price for the long haul and trading against it in the short term. And I'm like, well, it involves far too much work than the average person is willing to put in to do that. But that's what it takes, though. Like I was saying with this last post that I made about the previous day, before the weekend, this was it. And it was like most people would think end of day, end it early. And this is what it takes to be in for what it counts. The downwards move was bullshit. Hedge for big money. Watch the assets continue higher into next week. It was hard for people that didn't hold the long term long. They were all trying to catch it, and instead of holding the hedge from the day that I said it would have a meltdown, um, oh yeah, instead of holding the hedge from the day I said it would have a meltdown, um, yeah. So basically, that was the move, and I mean, let's go back in the chart and actually take a look at what it looks like at that time, because it was below. I've since taken off some of the analysis, but you can still see that there is a blue bar on 8 cap. Let me look at this.
It looks like it just may bust through the 15 and keep going up.
Take a look at that. And it's interesting that you say that, because it's like the last time that we spent as much time as we did at the 15, it did come down off of it. Now the 15's down even more, and we're spending the same amount of time at it. Yet the price is farther down than it was last time. It's like last time we had the price high, and it was high. Now the price is down, and this is
It's still pushing up though. You see that?
in the middle. Yep, yep. Whatever it does give, it's subject to having trouble with longevity though. Like I think that if the blue line does make it on top of the orange, it won't be long before it's back on it.
That's a little bullish too. See how that the cloud on the MACD was empty, and if you took that, you could take it down, but then you would have been wiped out already. It would have went past your price. So
Okay.
it's kind of bullish. A little bullish move there, but
I'm curious about it. I'm curious about it. I haven't
well, it's pushing up on the 15 now. You can see it. It's just pushing.
yeah, I haven't read it like that. It's an interesting way to look at the momentum.
I'm just trying to figure out, by looking at it, basically saying, yep, it's going to do this.
Well, the one thing that I notice about those environment or about those indicators is they change with the environment, like the way
Oh
that
yeah,
they're
completely,
used.
completely.
Hmm.
That's why you just don't use them by themselves. You have to use them with added confluence, right?
Yeah. Well, the thing is like it's like let's say it's in an environment where it's going back and forth all the time. It'll be treated a lot differently than in an environment where it's been
Yes.
going up all day or down all day.
Right. Right. But when it goes sideways like that, it will basically, and we've had these days,
I think it's more
uh,
effective when it goes
but
sideways. Yeah.
yeah, but you're going to see them. You won't see the big histogram, the big clouds coming down or the big clouds going up. You'll see
Mm.
everything just riding around the middle, like we did during the holiday season there between Christmas and New Year's, where really nothing much was happening sometimes.
Mhm.
And yeah, and you'll see the clouds get smaller and the lines will get smaller and we'll come around the middle. But until
Okay.
then, we'll make a move.
Hmm.
And you only want to really be trading when we get big clouds or big movement, right?
Mhm.
You know what I mean? So you don't get big clouds, you won't get big movement.
Mhm. Well, when everything's all congested at the zero level for so long that it looks like it's never going to be able to move again, the next thing to happen is for it to move again. That's the irony. Yeah, I'm just gonna grab a drink. I'll be right back. Alrighty. But yeah, no, I think that the MACD is really effective when we get days where there's a lot of volatility, but it's around a specific level, and it's not like trending so much as constant reversals, and a lot of secondary highs and a lot of secondary lows, M's into W's especially and stuff, so on.
See how the lines are through the top of the MACD now? We've kind of switched here a little bit. Let's see if we can get some energy going up.
Like they've come through the zero
Yeah.
level. Okay.
Yes. Yes. So it's going to be like a slow grind trying to push the 15 up. I see 261's been pretty prominent here today too. Just not the 188's 200.
Yeah, except for the big one. You could say it was used differently though.
Well, that one there, the secondary spike, like came within like a millimeter of 261.
Well,
That M
hmm.
before it went up. Yeah. Remember we were saying about the 241?
Yep. Oh, I remember this one was in line with the 261 here exactly, and then this one here was a little bit shy of it. $61 retracement. Hmm. That's the low of the. It used to be an important node. Got a little B point up here. That's the case.
Yeah, it hit
61%
the 188
of
this
that
morning.
one.
Yeah,
Oh, okay,
yeah.
and that's also the 61. Hmm. Yeah, I'm
So
not
what
interested.
it's doing is double when it hits the 180, 200, or whatever fib it just, and it's doing it now. It just doubles down or comes down even possibly lower because it
Mm-hmm.
does have space, right?
Mm-hmm.
So if you take a trade here, the RSI is not all the way down on the 1 minute. A more probable trade would wait until it goes all the way down to the bottom, but
Yeah, it's not exactly at the extreme. 261 perhaps. This also becomes a B point, as does this. Now, this 261, I think, like the way I would see it is it's a little weaker than when it originally formed, but you know, it's like it's like it's trying to be the low of the range, but eventually this range will end. Temporarily, we could be interested in making wicks and spikes, and obviously this is a huge like wick. More of this kind of action can be seen already at this level, and we can see more action like this at this level. You know, that's like that's a good way to put it. You know, I'm a fan of it that way.
yeah, planar range.
Yep. Like the equality of this is quite remarkable, to be honest. If you look at the amount of triangulation that we did at this point right in here, and how everything that we did outside of this triangle was kind of replicated on the other side just to make everything the absolute mean here. You know, no level has had more volume than this level right here. This is like, and it's not like the first time we've actually done this now that I see that. Oh shoot, eh? You know how even things were here? What if we do this move in the other side? That could be an interesting one because we were so interested in making this one even. And for what we did on the top, we tried to make up for on the bottom, but it couldn't make it through this level. And I could see why, because it was busy taunting these people effectively that lost money at that level because many people were squeezed, I think, through here. because it's not like it wasn't high, and it's not like that wasn't a big 261. Anybody that trades in the 5 minute, 15 minute, they'll be seeing that level. But it
This
is
may be the energy that we're on right now that push it through the 15 because it's bringing the 15 up, and a lot of times we'll see it grinding the 15, all of a sudden it'll just pull back, get some energy, and just burst through it. Maybe the time. We'll see.
yeah, this 261 is higher. You know why I like that 261 below though is the only reason why I made it bigger before it hit it, like why I liked it from the underside is because it was not just one 261. That's why it's kind of a bar. Is because it was multiple 261s collected at the same spot. Like that's
Broke
why.
out of that VWAP. I mean, it just went, it's right through the VWAP. But geez, was it? I mean, I say what, 6 times now,
Yep, and
just riding right through it.
it's cleared all of these B points as well. Another thing I noticed is it's very similar to the same kind of environment that we had here. Like when we pulled up and we made this M, it sharply did return back to its high like that. And it's a very similar kind of process to what we've just done here. I can't help but notice that. It is very, very similar. And it's almost like honestly like it happened here. It was just a little bit more drastic. Had a little bit more extra on the top. But the whole idea is that it did complete that process of being able to come back to the B point. Now it's starting to become the case that it is going to be too small for it to do another one of smaller size. Like, could it make one half this size? I'm like, I don't think so. The triangulation must be coming to an end. Because I'm like, what is it trying to do? Make a flat bottom triangle on the 261? If it, yeah, that's an idea actually, Flat bottom triangles in theory designed to break the bottom. But whatever it does break out of the bottom, it is subject to taking back. Now that's not in the rule book, but if you've been watching, you'll notice that's what they do, and it's far likelier for it to do that because it'll. A lot of people try to chase out of the flat part, and people will refer to it as an ascending triangle and a descending triangle, but I think it's far better to refer to it as a flat top or a flat bottom triangle because the matter of the fact is this is also a descending triangle, but it's a falling wedge. It's not this. This is completely different. It's got a flat bottom, but if you look it up on Google, it's a descending triangle. So I'm like, well, it's called a descending triangle because it's going down. Well, what about this triangle? Is it not two going down? Well, why would we pick that the characteristic that we should name this? When in this triangle, there's no flat aspect and no other triangle has anything flat about it. And this one does. And they would refer to it as declining or descending triangle. So in my opinion, it's easier to say flat bottom triangle. It gets the picture across. Flat top triangle. And the idea is it's supposed to be able to move up on this pattern. But the thing is this is what it did in the 1940s. It's what it did in the 30s. It's what it did, you know, early on when there was barely any volatility. And you'd be lucky for it to be able to do this now, because it always is interested in slumping back down. Sometimes it does a cheeky move like that and then goes up, but I'm like, that's only because it harms people when it does that. And I'm like, okay, sure. And of course it'll change up how it does it on every single triangle. Maybe this one has that movement and then it'll do another triangle and it literally only has a pop out of the top and then continues and doesn't do the bottom part. And it's like that's 2023, 2024 for you so far. Flat top, flat bottom triangle. Um, what it's known for, coming back to the flat part, contrary to popular belief, because if you pick up a textbook, the textbook hasn't changed. It tells you that if it's coming from this direction, then it's supposed to leave in this direction. And sure, it is physically possible for it to do this. It's just highly unlikely for it to work properly. Just like a head and shoulders pattern. Nowadays, like we can see there is an effective ones that do send it down, that do send it up. But the most common thing that we've seen out of all the head and shoulders is to create the same pattern in reverse, which is as good as a triangle that crosses the same point 1, 2, 3, 4, 5, 6, 7, 8 times. And in that regard, I would say it is a consolidation. If it cannot leave the same spot 8 times and everything that it does comes back to this line until it's finished, with everything becoming a smaller move until it's done, the best thing that it can do is end. I'm like, I don't want to have any part of that. You know what I mean? It's just rough. So, unless it's a huge version, if it's like a really big version, that's fine. But, a small version, like something this size, I mean, like, it's true we made a head and shoulders here and it did not work. Like, it came to the neckline and went up, which is interesting
I think if it
because,
wanted to really go down big time, it would have went down by now. Now it's just bashing up against the 15 minute. I think it still wants to go up.
well, we do have the imbalance coming up as well. So
Hmm.
it starts to become, like yesterday. Are we interested in seeing some increase in volatility for the imbalance? I do think so. And what it could do is, I think, a pretty strong fake break. Like a fake break, and then I think we could actually end up right back here after. After we break the red yellow line, I wouldn't be surprised if it came right back to this point. But what I was going to explain here, real quick, is notice how this head and shoulders, it's roughly the same time and everything that this head and shoulders made. It's like what I call conditioning people to assume that, hey, this is the impact that it have when you tried it, right? Because you thought it was a head and shoulders and it affected you negatively. So when you see it again, you won't try it. And I'm like, well, think about that. Most of the people that were there, that were patient enough to see that head and shoulders, to try that head and shoulders, better have managed out on the profit on the right shoulder, or they were destined to not only just lose money on the pattern, but it took the entire thing and more than doubled it up. I mean, like that's like wow. I mean, who would hold through that, right? So at the end of the day, um, that's the kind of difficulty that it's been presenting. And then it's like, oh, you want to try that again? I know it just like burned your socks off and everything like that, but you don't you don't are you gonna try it again? And it's like I'm like, really? People it does that to people? It's like a tough move, right? And the people that did take it effectively were put to the test immediately. And it's not like it wasn't off of a low that had a lower low and a higher low. And it's like, where have we seen that one before, right? It's exactly the same pattern in reverse. And it's like, okay, well, is it not true that when we do this pattern, every single time that we've done it, it's been roughly contained within this amount of time? And when we've done that time, oops, I didn't mean to take that white line. And but you can see every time we've done it, it's done that much, right? And it's produced this amount of movement. Whoops. There. So we saw this one here. Did it produce this amount of movement? Like it did. I mean, undeniably. Like, and it didn't take that much time though. Hmm. But you want to know what happened at that time? Is not another thing took that much time again. I guess you could say this thing took more time, but that's not that much time. And that's the interesting part about it is I'm like, well, I'm looking for a specific amount of time and a specific result out of that time. I'm looking for this amount of time to result in this amount of movement. And I'm like, I can see that that has happened twice already. And there's a danger of putting a Head and Shoulders that takes this much time. And it's not roughly this much space because we can see this one is a little larger. And obviously, we have seen that move again, but I can't say it had any kind of resemblance to this move. And what we have in here is, you know what it reminds me of? It reminds me of, hey, everybody, you can see exactly how the Head and Shoulders have now worked for these people. You can see they've worked out really well. Now try it for yourself. Look, and look what's happened. That one failed right through the ground. This one could barely get off the ground before they were like smash. And I'm like, wow, that's aggressively, rough. And then I'm like, okay, finally. They're like, here, oh, you have a normal Head and Shoulders. And that failed because they're all at a loss right now. And, you know, what that reminds me of is being able to take a Head and Shoulders into an inverse Head and Shoulders. Like I was explaining, is very common nowadays, and it did this. Of course, it does end at some point, but until that 8 sequence move is done, where everything leads back to the middle like a jillion times, which feels like this. I'm like, yeah, I feel that here. I'm totally. So here we are gyrating through the roof of this consolidation.
See, just was doing it. Came back down, get some more energy to push through the 15.
It's
Freaking
interesting.
awesome. Yeah, that's what I look
Mm-hmm.
at it.
Well, let's take a look at the 15 here. Well, it's not through it yet. It's touching it for sure.
Oh, I know.
So it's interesting because when it let's say it comes down to hit these highs, like I see on the short term, it's got a blue line here. That I'm like, I don't see an instance of reality that it does not get hit. So we would
Right.
understand that to get hit,
Yep.
but that's fine. I wanted to make it blue and white, but it's gonna hit it before I can. Oh, there we go. Basically like that. And I'm like, oh, the more I look at that, I can see it's taken whatever we did out of the bottom and put it on the top of this area, which is the middle. So that level was hit, but obviously not that significant. I just want to point out that the fact is it is still doing that. And what it did here is remarkably a really similar version to what it did right here. Like I can go ahead and take this over. And we can see the same kind of components exist here. Like we're talking about a spike on the top, a spike on the bottom, a consolidation in the middle, and it's like the same sequence of movements happened in this environment. And you can almost see that it came from doing that here. Like, wow, this is an interesting perspective. It is a perspective that allows you to see something that is constantly happening in this consolidation. It is true that every single time that we make one of these moves, it breaks the trend. Sometimes it can make two. Oh my goodness, yeah, this is really interesting when it makes two like that. I'll show you something. If I take these two moves right here, this move, this move, this move, and this move, that right there is something similar to what we always see, and it is this, an M into a W, just a different perspective, but it's true. Sure, what's going on with this playlist.
Yeah, I'm thinking maybe the imbalance or the close will push it up. I mean, I can't batch this many times without going up.
Yeah, I'm curious. I don't have much of an opinion on it. I don't think that it should be traded from this point or nothing, but
Oh hell no.
short term, I'm just
Yeah,
observing myself.
yeah.
See what happens. Curious. It's I I constantly, have an idea for it, and now I'm curious to see. I'm curious to see what's going to happen with this. This is a new thing to me. So let's watch the momentum and in this different way and see if it amounts
Momentum's
to
certainly
much.
pushing up on the MACD.
Yeah, because I'll tell you one thing:
Yep.
the way that the bullish and bearish divergences have worked. I mean, I guess you can see that this one had a bullish divergence and it played out this much, and I'm like, okay, well, it means that when we had a move that was this far apart, um, and it had this much of a divergence. Whoops, this much of a divergence, it went up that much. And it worked that much, and it's fine and everything. So I'm just like, okay, next time, and I'm like, okay, this one's like a flat high here, and throughout that time, it was going down, and it meant that much roughly. Um, and I'm like, okay, it's interesting that these two lows here still were going down, so they didn't have a bullish divergence. It was on these last ones that it developed that bullish divergence. Um, and I can see that very clearly. So,
It's a consolidation area. I mean, a lot of things happen both ways um, through here. But what really stands out for me is the fact that it hasn't gone down. I mean, it hasn't taken the elevator to go down anywhere, really, of any great distance.
well, one thing that it did do that it likes to do in really bearish environments is it responded like negatively to the downtrend. And at the point that it did that, it had the negative response
Yeah, the RSI.
on the RSI. So it was working together with it. Yep.
Question is, how many times does it have to bash it before it breaks it? Does it have to go down even further to get more energy to come up and bash it?
Yeah, because like, well, another thing that's really intriguing is for this consolidation to end, I think we have to be prepared for it to make a move twice the size of the entire consolidation. And at the way that things currently are, everything's centralized. I'm like, how is that going to change before we double? Is it going to insinuate that we're going to double? Because I'm like, the result of us is to leave this area and double. And if it doubles down or doubles up, there will have been no indication on the short term from this point. It'll be long term, perhaps. So that raises the question of like, is everything in the middle on the other time frames? And I know even just from switching the 5 minute, we can see that it's not necessarily been in the middle the entire time. The entire time that we've been in the middle, it has been coasting downwards, which is interesting. And then we
Well,
go
we've
to
been in the middle for a while with the 15-second RSI. Every time it hits the top of the 70, it comes down. Every time it comes down, it hits the 30, it goes back up. So it's working within that range. It's not like hitting the 30 and then continuing to go down, or it's not hitting the 70 and continuing to go up. It's not. So it's right in the middle.
right.
Huge indicator. Yeah.
Well, I mean, for the different time frames themselves, like if we look, this is the 15-minute time frame altogether, like for the candlesticks, And looking at that one, and I can see the 15-minute on the candlesticks, like it it effectively has been going down the entire time we've been going sideways. So it makes me think that if we are to spend more time going sideways here, are we only going to continue to have a negative impact on momentum on the 15 minute? And in the event that we pull up to a secondary high, do we think that this is going to be able to match that high, or will it have a bearish divergence and effectively break the trend down? That's one thing that I'm considering. I'm like, on the next upswing, this better get back to the high, or else it's gonna have a negative divergence. And I'm like, it's true. The 1 minute's not showing that, but like the 15 minute, it can matter a lot. And I'm like, even on the 5 minute here, I'm like, if it comes back up, I'm like, do we think this is gonna rip all the way back up, or is it just gonna make it to here? That's a major issue because this could make it back to the red zone, but it might not be as high as the spikes. I'm curious about that. I'm curious if they try and fail because my original idea with this one is that it would have a fake break and it didn't fake break necessarily. It had a negative response, I suppose. Didn't break it and come back through it, but I mean it's second best to a fake break is a negative response, I suppose. I mean you would treat it the same way. It's like the idea that you don't really want to. Yeah, it's tough. The fake breaks can offer minimal movement. If the expectation is the trend is to break with great force, then a fake break is definitely like a curveball. So like what it's doing right now is intriguing. What does the daily look like for the momentum? Forget the lines there. Let's take a look at this one. So like we've been making higher highs and the momentum is not making those higher highs on that longer term time frame. We can even see that, in accordance with this major high here and this major high here, it's not made new highs. And it's like it has made lower highs like that and only come off a little bit before. That's
Yeah, if you don't give an idea on the daily, it looks like it's got room to go up because there's nothing but a cloud down there.
it's true that it could
See that?
come. Yeah, it
Yeah,
could
yeah.
come.
Back up to zero, and let's just see where that puts us, just on the daily.
Well, one thing that's interesting about that is if we were to slowly grind right back to the high, this could get back to the middle. But as it
Okay.
gets back to the middle, I would wonder if these bars would start to fall beneath.
Yeah.
Because,
They
we're,
would a little bit, yeah.
yeah, we're at risk of those bars starting to go beneath, I think. I know it went above for a little bit there, but it's
Yeah, they're pretty close to the middle, eh?
yeah, it's
Okay.
it's it's an interesting one for sure. Because I mean, like, okay, the risk of it doing that is there, but if we can turn this into a support, which I think we might try to do, and that could be for the next few days us grinding at this level. It is actually quite appropriate. Like I said at the beginning of the day, I was talking to Ryan about it, and he was like, I don't want to want to hear that it's gonna go sideways, and I'm like, well, unfortunately, it is true that that is the case. There's a lot of reason to believe that um, something like this in the 30 minute, where we've been at this price many times before. Uh, it's inside of the middle of many moves and close to the POC. Um, this has already been an equilibrium multiple times, and it is debatably the
What time
equilibrium
frame
again.
are you on?
This is the 30 minute,
Oh, okay. Cool.
so
Yeah, we are in the middle.
it's totally in the middle of the 30 minute. It starts to make me think about where the 61 is to this major dump. It's like, are we gravitating towards that 61? Oh yeah, we're at the 61. That's literally
Oh,
the
okay.
whole day. I can't believe that. Yeah. No, that one could have been seen a little bit earlier.
Okay.
But hey, what can I say? At the end of the day, that 61 has been we've been grinding the crap out of it for so long now. It could lead. You know what it really makes me think is it wants the 61 to the downside, like a 61 to a 61, and it would clear this B
Where's that
point.
put us?
It would
Oh, okay,
put us
okay,
at the.
okay. Does that make sense?
Yep, I would like to see the B point, and I know that that B point down there too. It's gonna be something like a yeah from it's around the 261, and it makes sense that the 61 is close to the
We'd have to wipe out
B
all of
point.
today's gains. And
Oh,
we are, if you did trade today, to hold it long is a huge risk because if it comes all the way back down to touch the B point, well, it's no big surprise, right?
it would be more than today. This would insinuate that coming back down to make this into a W, into an M, could be on the table. Oh yeah, that would be an attractive reversal spot off of this low. In fact,
Off the
if
fifth wave, yeah.
yeah,
We'll say 3 waves down from the top, yeah.
yeah, that's true. This entire environment, what we could get out of this is a head and shoulders because it would be 3 waves down.
Yes, that's what I'm thinking.
There's a lot of ways that they can do that, like responding to this level right here. That could be an interesting level because it's got through the high down to the bottom. If it made this high and then responded positively, it would be like it would be kind of like this pattern.
Yeah, when it hits the blue line, that'll be very interesting. If it goes up or what, but if you notice too, it's starting to change on the volume profile too at that particular point, around there. You know, from red to yellow. That'll be big.
Yeah. Well, one thing about this, it gives me the vibe that it's not going to be even. That's one thing that's strange about this because I specifically drew it like this so that we can see that the low has a left shoulder, a head, and a right shoulder, and it ends with a high with a left shoulder, a head, and a right shoulder. Like this is an all-in-one. And could be appropriate in this environment. I am curious about that. It's not uncommon for it to do that though. It's not far back that we can find it doing it. Yeah, I see a lot of head and shoulders leading to the same level that they had the consolidation at. A lot of the time it's not been reversing the trend as it typically would, but leading to more consolidation. Even on the long term. Oh. The bleeding out that's the slow can lead to fast here, which is kind of intriguing. Yeah, actually the imbalance that's the pinnacle of interest right now. We want to see that blue dash line that it's a time. Effectively, yeah, see the fastness has come down to the 261 again. So what's this here? What does this look like? If I put a fib on here, that 61, technically, I mean, I've been looking at that 61 all day in combination with the V point. Oh, you know what I said? I said that that VWAP, when it comes to the B point, it'll be interested in it. That's what I said. It's through it now. So, curious about that. This time we've hit it. I'm looking for less of a response than we've ever had. So I'm like, you know what this reminds me of? It's doing the flat bottom triangle. Like I did the whole explanation on before and I was like, well, the flat bottom triangle across the 261. And the name of the game is to break the flat bottom. You know, you want to know what's funny about this is like in originally, you know, it's meant to continue a downwards move. And I mean, continue a downwards move. It doesn't even have a downwards move to continue. And then it decides that it has the audacity to become a reversal pattern. And I'm like, well, don't be surprised if things go wrong with it. And I'm like, well, what could go wrong with it? Well, the entire thing becomes an M and ends up right back at the flat part. Well, the flat part becomes the B point no matter what, so it's kind of hard not to end up back there. But if we take this range, and if we decide to end it by doubling it, and we decide to end it by doubling it down, well, it becomes this level, this 61. I mean, it's in line with the 188, 200, and so on. It should be at least. Not not that one, but this one here, which is kind of weird. Because I'm like, well, if you take the entire area, we know how much things like to double. If it doubles down, it would be a fact that we're at the 61. So I find that suspiciously particular, because I'm like, well, why is this area even important? Well, that was the area at the bottom that we used for the same B point. And I mean, like, well, if this is the W that matches this M, don't be surprised if they have similar characteristics. And basically, these portions, whoops, that we have here are matching the highs and lows. In fact, I didn't draw it right up there, but it's true that they are matching. Basically, let me remove these lines. So yeah, it puts a lot of pressure on this level. Many people, I would suspect, would be providing a big chunk of stops right beneath this level, eager to get hit near the imbalance
This one came off at 261 too.
of the very short term up here.
Yeah, just to the right. I went to the right.
Oh, you went
Yeah,
here?
that one. Yeah.
Oops. Yeah, I see that 261. Yeah, this distance down here, you could say that this is the beginning of the trend. And we go and we go up to where we have the high of the trend. Notice that that is the distance that we have been presented with, and there has been no time at any other point that we have had that distance that we could say, you know, it's anything remotely similar to the beginning. And I'm like, well, when we even get an M into a W, it's true that the most controversial point in the beginning, it does come to an end the same way that it begins, and it produces the same kind of volatility that comes from the beginning at the end, making the whole thing very symmetrical in many different ways. Um, so what's to make it not do that here is what I think. I'm like, oh well. It's been undeniably difficult for anybody to try and get exposure to it doing that. But does that just mean it's going to do it better? Because at the end of the day, I mean, yeah, sure, it's taken a lot of time, but not necessarily has it done much to those that keep their stop at the extreme. I mentioned at the beginning of the consolidation, keeping the stop at the extreme could be okay. I'm not sure why that's popping up, but The imbalance is coming up. Keep in mind we're doing the imbalance off of the 261. There it is. Good spot to consider taking some profit if you have any hedges going. The VWAP down below is a nice spot to put some more orders to take more profit, but effectively we've managed to crush the 261 and we're interested in the VWAP. The 61 of the entire move, of course. I do think that that's going to be on the table. Any kind of fluttering that we do could come back and test the B point, but that's pretty normal. That's why I suggested to take some profit off. Of course, there is a 3 drives pattern. Dragging your stops within its path of hitting the drives are a little rough, so keeping it out of the imbalance area is key. I do think we're going to see that 261 again, testing it from above. That's what we're doing right now. The breakout to the upside is, I think it's faltering a little bit, but curious to see. We've managed to make a spike on both sides of the consolidation now of equal size roughly, and now it is the case that we have this giant consolidation in here, and it has a spike on the top and a spike on the bottom. We've seen that before. This entire consolidation is full of it.